Well, hey everyone, welcome back to another earnings live stream where we're going to cover Tesla earnings, Enphase earnings. It's about 12:31 now, so earnings, if you're just now tuning into this video, would be about 34 minutes from now for the release of those earnings if you want to scroll to about 34 minutes in. In the meantime, while you're bored, go check out househack.com. The fundraise is live, yields 5%. You get upside in the company's stock and downside protection, which is pretty awesome. But between now and then, let's see what's going on in markets. So today's been sort of a very interesting day. This morning, we said a lot of bad news from yesterday was priced in because we saw obviously a big negative day yesterday. So a lot of negativity was built in yesterday. What we ended up with this morning was this idea of, okay, well, like we can't really be bearish like we were yesterday. There's logically some potential for a bounce here. But what we ended up finding was we had rumors that were probably traded on by institutions that there was a potentially, Besant's warmness on making a deal with China, and then potentially progress, as reported by Politico, with Japan and India. The problem was most of the upshot of that trading was conducted apparently by institutions because we didn't know about it until the run-up was already in. Most of this news was already reported, was not reported by the time the market had already run. Now, it's possible that people were buying the dip out of FOMO, not really sure what the news was. They were buying the rumor rather than the news. And as soon as the rumor or the news came out, people were selling. But I find it somewhat more likely that institutions were kind of buying ahead of the rumor or like the news that they already knew was coming. So they were sort of buying the insider information and then dumping the publication of that information, which in my opinion is just a straight up form of market manipulation, because you're not actually doing buy the rumor, sell the news. What you're doing is buy the news that you know about because you're an insider and then dump it when it goes public. Well, that's fraud. But then again, that seems to be pretty common these days and almost encouraged, which is really sad and depressing because people with integrity just go, whatever, man, I'm not playing the game then. That's a scam. So anyway, what we do find in the meantime is Celsius is approaching that $40. This was expected. This morning we were talking about this in the Alpha report as well. CoreWeave, in fact, when I published my Alpha report this morning, was up only 1.5% to 2%. And I published the Alpha report. I mean, you could see it on the chart before the market opened. I said, hey, there's a good chance of CoreWeave approaching 40 today as you get some volume coming potentially from NVIDIA on their $250 million backstop promise anytime CoreWeave falls under 40. This seems logical, but as you could see, it would have actually taken some patience to get that full 10% today on CoreWeave. But it was a pretty dang easy setup for a trade. We talked about it in the Alpha report this morning. If you don't yet know about those, go to meetkevin.com. It's less than $2 a day for a membership that you pay. You get all the courses, all the course member live streams, the Alpha report, everything. And I do my best to provide these insights, including, in the Alpha report this morning, we talked about how there were rumors about a trade deal. We thought it was with Vietnam, but it turns out those trade deals were related to India, Japan, and China. But some of that was starting to get priced in late in the day yesterday. And that was probably because, well, frankly, people on the inside started getting a little bit of a heads up. Obviously, no actual deal yet. So we'll see what comes out of all of this. Today, we've got some entertaining earnings. We've got Tesla. We've got Enphase. That'll be interesting. And we also have Capital One. Capital One is always interesting because they show you a little bit more of the, unfortunately, lower end consumer. And I thought it was really interesting. Rabobank put together a piece on how Gen Z is drinking, and this is related, is drinking less alcohol than like millennials or Gen X. And people are wondering, why is Gen Z drinking less? Are they just like a more sober generation or something? And it turns out that Gen Z are drinking just as much as other generations by age as a percentage of their income. Put bluntly, Gen Z doesn't have enough money to buy enough alcohol. Kind of crazy and kind of sad. Anyway, all right, so we'll get Tesla, Capital One. I'll make a note, I guess, too, on the Rabobank alcohol report. I thought it was fascinating. Like I like to read every single day, and I find little facts like that very interesting because they give you a perspective that you just don't get if you're not reading all the time, or if you're only on, like the doom scroll binge. X is really that sort of place, and it depends on who you follow, obviously. And I'm not trying to poop on X, just saying you have to kind of balance X with other, things, like go on a walk, go watch a movie. Okay, good. So anyway, what we've got now is about 24 minutes to go until the bell. Now we've watched CoreWeave get almost up to its full 10% here. Earlier it did. But I'm also watching the Qs, because what I think about the Qs is you are actually seeing this sort of fade that is bringing us really back to pricing we saw this morning. I mean, this morning we popped off of the 438 line. This is the same line we rejected yesterday. And today we're just barely 2 points above that. And so I'm curious to see if we're going to see a bounce here again, some green candles, a rally into the close, or if we're going to see a sell-off into the close. Lately, we've been getting a mix of both, and it just sort of depends on the day and what the trade rumors or the Trump news of the day is. Obviously, paying attention to Truth Social has been very entertaining, just because that's where you could get some of your latest finance drama if you're looking for some finance drama. Anyway, then we've got a Tesla up about 3.7 following yesterday's decline. You can see this very, very neat bounce right here off of $230. And we really just played no man's land today, which is fine, but you really did not have a line to run up towards. I mean, other than 247, but that was unlikely to happen today. So you really were going to reject somewhere in no man's land, and sure enough, we did. And then, of course, Enphase, which has really gotten beat up. I think we're at, what, 53, 54 bucks now on Enphase? And find the darn thing. There it is, $53. A lot of the growth at Enphase has really been written down. And I wouldn't be surprised to see, I mean, I hate to say it, just depends on how bearish analysts are, but, I don't think anybody thinks Q1 was a good quarter. The irony of that is, if nobody thinks Q1 was a good quarter, it's going to make it really easy for them to beat. So there's really no, easy way to say, oh yeah, this is going to be an easy beat or, an easy miss, because the opposite often happens with earnings. Let's look at volatility though for a moment. So Nphase, on a historic volatility basis, is certainly elevated on the 10-day. If I go down to the 5-day, we're more in line. So, and if I go to Tesla, we're pretty in line on the 5-day right now as well. But we're pretty dang elevated on the 10-day. So you might still see some juicy premiums on Tesla for sold puts or sold calls. I certainly know there are some people who have Tesla shares and they're selling, $300 calls, or they're selling, 250s. Let's see what you get. If you sell a 250 right now and you go sell it out through, maybe, I don't know, do a 6-month sold call on Tesla, and you go for a 250 sold call, I mean, you're getting paid $40 right now to sell a call on Tesla through October. That's crazy good. I mean, think about that for a moment. Let's say, like, you're basically selling the shares at $290 a share. Right now, I don't know that you necessarily want to do that today because it's the day before earnings, and Tesla could be $290 tomorrow, but it could also be $190 tomorrow, or it could just be $235 and nothing changes, right? But I mean, look at the volatility of this. $40 at $250. That's out of the money too. So $40, that's like selling it for $290 basically. But $40, we're talking. I mean, it's an easy 20%. I mean, it is 6 months, but still, it's pretty decent. Now, the problem is, the reason you could get this sort of premium is, if it just keeps falling, then what good is it, right? Now you're losing your value at your underlying shares. Now, it protects you somewhat. It basically brings you to a break even of $196 to the downside. But if you go under 196, you're going to lose even more money. Now, if you go over 290, well, then you get your shares sold out and you miss that upside, right? So you're really betting on this middle range. But boy, if you're looking for some protection on Tesla right now, and you don't really want to sell your shares, those sold calls they're paying big dollars. I have not seen these sort of payments. And that's just the 6 month, right? I mean, it's going to be less desirable as you go further out. But I mean, let's say you go to like March of 2026, because you want to hedge for a recession or whatever, you're getting paid $54, which is also pretty dang impressive, right? 54 divided by 250, and we're a little bit more. It's not too much more, a couple more percent. So interesting, but 6 months, even 90 days, honestly, is probably pretty nice. Like if you go over here, 87, go to July 18th. What is July 18th paying you? July 18th. See, look at that. July 18th is paying you $27. That's pretty good. That's over 10% for 90 days. Those 180s, they still smell pretty good, though, I will say. So that's interesting. I've seen some people look into strategies like that who are just trying to minimize some of their volatility. They're like, I'm okay giving up some of the upside. I'm okay giving up some of the, the downside. I just want a little bit of a cushion here and something to milk during the volatility. It's an interesting strategy. It's not for everyone, though. I get a little bit of a push here into the close. And we'll see, too, with earnings. Honestly, volatility will probably still be somewhat elevated tomorrow. So you can always make that decision tomorrow. So somewhat interesting. So yeah, let's see here. Let's see. Okay, so getting into the close. Looks like we're getting last minute here. We got a little bit of a green candle on Qs. You know what I think is so fascinating? At least it's for me, it's really fascinating. One of my first jobs was working at Red Robin, and I really thank them for getting me into real estate because, long story short, they sucked. I got videos about this on the channel. And it's kind of funny that I left Red Robin for real estate, and now my real estate company, with just net assets, I'm not even talking about market capitalization, I'm just talking net assets. The net assets of the real estate company, House Hack, is worth more than the market cap of Red Robin Gourmet Burgers. That's insane to me. Like, if you liquidated House Hack, you could take the cash, buy 100% of the shares of Red Robin Gourmet Burgers, and still have money left over. You'd have like $10 million or $20 million left over, right? I mean, House Hack, it's probably, the last August was valued at up to $2. Times book. So that'd make us like $140 million company. This is a third of that. So it's kind of crazy to think about that. Anyway, so I think that's kind of cool. I mean, we've got some really cool things coming too with House Hack. A lot of the things we have to announce, we'll do after the fundraise that we're doing right now, mostly because we've already been talking about some of the things as ideas, but once we actually launch them, we'll be in a different place and it'll be really cool. So anyway, getting a little bit of a buy the dip here into the close. Look at this. So look at these volume candles right here. These could be last 20 minutes. These could be ETFs. They could be leveraged ETFs. I wouldn't actually be surprised if we see some movement in the leveraged ETFs. Let's see here. Oh, got to switch over. So it's going to take me a second to get there. So leveraged ETFs, like a 2X ETF or something like that on Tesla could be seeing some of the inflows. You're seeing the same inflows into the Qs. So it could just be broad-based ETF inflows as well. People buying the Qs, people buying even the triple Qs is something common that we've seen right now. Let's see here. Okay. All right. And then we've got that. We're in the final 15 minutes here. There we go. Okay. So let's go with Tesla. Tesla is the yield option one. What's the, is it Tesla? Yeah. 2X Bull. Here you go. Yeah. See, look at the inflows into the Bull ETF. So volume, not as high as it was at earlier parts of the day, but you could certainly see a pickup in volume right here going into the 2X ETF. And you want to be careful with these 2X ETFs because, I mean, just look at the performance of this. This thing, opened up at, looks like probably about $20 a share. And, now it's trading at $7. So it's lost a substantial, it's lost over 60% of its value. And it's hard to get back on these. Although look at the volumes here. The volumes are exploding on this. I mean, geez, man, a 2X Tesla ETF has $3.4 billion in assets under management. Shows you just the power of these kind of like thematic ETFs where you're not actually really doing anything for the customers other than providing leverage. That's all you're really doing. You're providing that, well, look, 95 basis point expense ratio just to provide 2x leverage on Tesla. That's wild. So, but one of the reasons people like the leveraged ETFs is you don't get margin called on them. The downside is if you hold them too long in a depreciating market, you get trapped low and you end up underperforming the actual underlying stock, which is quite interesting. How do they provide leverage? Dan OS in the chat. It's typically options. So like they are, don't get me wrong, they are working for that, but they usually do it through options and swaps. So like there is some work involved, in fairness. I don't understand why Elon would be in dirty politics. Well, I think Elon truly believes that, the country is screwed if not for Donald Trump. Obviously, 50% or maybe even more now of the country thinks the country is screwed under Donald Trump. This isn't to make a political argument. It's just simply to say I really think that, Elon doesn't really think about the externalities of like, oh, if I get involved in politics, this could be bad for Tesla. I think he just thinks, oh, no, I must do great for the country. This is my mission. That's my take. So let's see here. Howler says, Kevin, love your takes. Thanks for redoing. Oh, thank you so much. Appreciate that. Leverage ETS decay over time. This is very true. Yeah, that's why you gotta be careful with them. Tesla sells the future, not cars, batteries, robots. Written by Booger Eater. That's I don't really know what to say there. Burger hack time. Yep, time to buy Red Robin. Big announcement. Househack acquiring Red Robin. Like Househack, Red Robin would be an interesting brand to acquire, but you have a few big problems. First of all, you're in the restaurant industry, which is really in decline post-COVID. Second of all, the mall industries where Red Robin has most of their leases, because they're not like McDonald's. They don't own a lot of real estate. Most of their locations are leased locations. Well, a lot of these leases are in crappy malls that are dead. So like you would like be willing to pay just to break leases and close stores because you're just losing money hand over fist at a lot of these Red Robins. So really you have a company that's locked into high debt load, locked into bad leases. And, as a result, the brand value is being diluted or basically, is suffering. It's going down because of these lock-in effects that are very expensive and costly for the corporation. So it's actually like logical where it is trading, because honestly, the best thing Red Robin could probably do is go bankrupt. But you can't really buy a company and take it bankrupt. You could do a hostile takeover and try to take it bankrupt. But if you're going to get like a shareholder vote to acquire shareholders and then you take it bankrupt, you're just going to get sued to oblivion. So you probably just like to actually buy Red Robin, you probably have to just buy them out of bankruptcy. That's probably the way to do it. Like let somebody else take them into bankruptcy and then buy them if you even cared to get into that industry, because it's also, like I said, it's a crap industry to get into. It's very, very difficult. Everybody's trying to sell more alcohol. I noticed, I went to Dave & Buster's the other day. You would like, tell me if I'm crazy about this. Okay. But I went to, Dave & Buster's the other day with the kids, and they're like, hey, we're doing this new thing, happy hour 4 to 7. And I'm like, oh, that's usually your busy time. How are you doing happy hour 4 to 7? They're like, shots only $4. And I'm like, $4 for a shot? That's really cheap. And then I asked about the kids' meals that we're ordering for the kids. And I'm like, they come with a drink, right? And the guy's like, no, we now charge for the kids' drinks. So now they've gone from free drinks for kids to $3 for a kid's cup of soda, $2.99 or whatever, but then discounted adult alcohol. And I'm like, this feels backwards. But yeah, interesting. Rich Zamora, shout out to Kevin, bro. I've been watching since the pandemic. Please keep doing morning live streams. I miss that reamed it in the lead. Yes. Gain the lead.
Gain the lead.
We do morning live streams every single morning for like an hour with the course members. It's the same thing. It's market open bell, and I hate to make it feel like gated, but it's I don't have to worry about like the madness of like the YouTube algorithm where, the morning live stream is destroying the productivity of other videos, right? So it's not that I don't want to do it. It's that like it screws the channel. It sucks. So anyway. Red Robin already closed most Canadian stores. Yeah, that doesn't surprise me. Probably because they were able to get out of their leases, honestly. What are your thoughts about Canada kicking Tesla out of the EV program and charging him fraud? I didn't see the fraud charge. I see a lot of this, sort of anti-Tesla. I mean, a lot of it is just straight up politically motivated, right? And it's unfortunate, but it's very politically motivated. So Ridham says, "Hi Kevin, I have a house hack question." Oh, yep. Remember, we got a fundraise going on, but we'll put the question up here for a sec. I have a question for house hack. How do you value the market value of your properties and value the wedge amount? Okay, and share the authenticity of the market value. Well, actually, I think the market value derived is probably lower than what the market value is of a lot of these properties today. So what we do with most of our properties is we'll buy it, we'll fix it up, and then we get an appraisal. And then whatever the appraiser says, we just put it down. If we don't have an appraisal, then we just look at what the comps are at that time. So some of these properties we bought in 2023 or got appraisals in early 2024, and it's been another year. And a lot of these markets have appreciated because we've bought in appreciating markets. There are a lot of markets that are depreciating, so you want to watch for that. But it's an interesting question, so I appreciate you asking that. Hopefully that answers your question. But also, we put this together, which we thought was really interesting because people kept asking me about like, hey, what's the benefit of house hack right now? So I put together this little like almost brochure. Let me know what you think about it. Maybe y'all can just give me like legit feedback in the comments. But we thought it was really interesting. You can diversify away from stock market valuations right now. You could diversify away from, frothy VC AI valuations. We were valued last year before we had a lot of things we do now at, $1.40 to 2 times per share. It's a multiple, 1.4 times to 2 per share. And we're fundraising at the low end of that, the 1.4. So, we could be worth 42% more than what we're fundraising at. So I think we're fundraising at a discount for the people who follow me. Then diversify into American real estate, diversify into discounted fixer-uppers, diversify away from long-term treasury risks, right? You don't have to worry about treasury risks because you earn a 5% yield with us backed by real estate. And you diversify away from most tariff risk. Obviously there's going to be a little bit of tariff risk in like, oh no, the copper plumbing that we need to repair. I mean, it's not like we're solely fully building homes. The vast majority of our portfolio is just repair and rent. So we think you can diversify away from most tariff risk. So we kind of think it's an interesting time to diversify away into real estate. And I think it's why it's not designed to be a pitch. If you want to learn more about it, you go to househack.com. But I think it's why we're seeing a lot of people moving into house hack. I mean, in just the last like 4 weeks, we've raised over $4.5 million. And if we include, some of the Reg A rounds over that and some of the other cash that we've got, we're sitting at like $12 or $13 million in cash, just ready to buy the dip in real estate, whatever happens. But it's interesting. So I'd be curious to see what your feedback is on that chart. But in the meantime, you are getting a bounce here into the close on the Qs. You did get some fading throughout the day. As you could see throughout the day, we were at higher levels. You got fading, which is not uncommon, but I do think a lot of that was probably institutional trading that's coming in and saying, hey, we're in, now we're out because the news dropped, So Kevin, your alpha report made me a quick $40 on a QQQ put afterwards. Green candle mentioned. Nice. Keep up the alpha. Oh, thanks, Ralph. I appreciate that. Yeah, that's awesome. Yeah, the alpha report, yesterday especially was a banger. This morning, I think, was pretty good too with CoreWeave. I will hire Kevin and watch K live, how he hammer a complete house down into the ground with one gold bar. Yeah. Written by Rays. It's like the perfect name to say that. Elon's political situation is 10x worse than Bud Light supporting trans people and pissing off MAGA folks. He literally is the antithesis of all things his customers care about. Wow, that's pretty blunt. You know what's actually funny is, to some extent, Bud Light almost became a meme to where like it was so hated that people would buy it who ordinarily wouldn't buy Bud Light just for the memes. Yeah, you put like the cowboy hat on and get the pack of Bud Light and show up at a party. I don't know. I think it's funny. Not that I ever did that. I don't have a cowboy hat. But yeah. So Ryan's asking, what if House Hack never goes public? I mean, I want the company to go public, and we were going to go public in January. I canned that because I thought we were in like a crazy euphoria that wasn't going to last. And sure enough, you know, the market's been tanking the last like 3 months. So knock on wood, that was great timing. But we know the process for going public, and we know it's very doable and possible. So I don't see us not going public. I don't actually see that as a very difficult barrier to cross. But I mean, like worst case scenario, you just pay out dividends, you know, that like you if the company doesn't grow into something that goes public, you just pay out dividends from the rental yield, right? So that would, again, that's not the goal at all. Like, I think that the future of House Hack grows faster public after this next recession or whatever we're going through. It's a good question, though. I appreciate it. I respect the question. And I get that. I'd say the goal, just where my crystal ball says, is between 28 to 2030. Because I think then we'll be through whatever recession this is. Like the money printer will be back on again, right? I think that's true for everybody who's watching. It was like, you know, 28 to 2030, 2032. I think that's going to be a really glorious time again, because we'll be back on Train America, right? Like Kevin will be the buy the dip bull again. It's really interesting. So anyway, we're 2 minutes away here from the bell, which means we're about 7 minutes away from earnings. Kind of excited to see what happens with earnings here. So Hertz and Bill Ackman thoughts. I don't, you know, I see why he's doing it. It's almost like a supply chain hedge, because used cars got really valuable during COVID, and we're kind of going into a COVID style shock. So I don't really blame the strat. I don't know that I would do it. Yeah, I don't know. I get what his strategy is. And he's basically talking about, it's actually relevant to Tesla, by the way. Bill Ackman's basically saying, Polymarket has a bet on what Elon's going to say. Oh, I'm going to look that up. Bill Ackman's basically saying, you know, Tesla beat up Hertz stock. And one of the reasons Hertz stock sucks is because of the Tesla cars that depreciated so much. So it is interesting. You know, it is something where it, you know, makes you wonder what the Bill Ackman manipulation is. Even though I'm a licensed financial advisor, didn't mean to push that one. That's old. I got to get rid of that. How about this one?
Just close the fucking door. Close the door.
Who was here for that live? This one.
Just close the fucking door. Close the door.
Who was here for that live?
Yesterday's Mike Santoli back with us. We're happy to have him right here at the desk with us today. Dow's going to go out with a 1,000-point game as it settles out here in a decidedly green day. I'll see you tomorrow. Into overtime with Morgan and John as we await those Tesla numbers.
Well, that's the end of regulation. NASA ringing the closing bell at the New York Stock Exchange. Vantis investors doing the honors.
Nice.
At the NASDAQ, a solid read.
That guy was funny. The guy who hit, like, you have to like replay the live stream 10 seconds, but after he gavels, he like throws up his hand like he's like Thor or something. You can play that back yourself. I don't have a capability of doing that right now, but I think that's kind of funny. Okay. So I judge the hammering because, you know, I did the hammer. I had the honor of doing the hammer at the New York Stock Exchange. And it's pretty cool. We usually get to judge people's button pushing abilities. It turns out I know how to push a button. Hence why I'm also now a pilot. I can push a button. autopilot. Just kidding. Every pilot right now is rolling their eyes to that because it is such an oversimplification. But anyway, all right. So, all right, boys and girls, Tesla earnings are out in what, 3 minutes? What are they saying here?
Stepping down as chairman of the board of nuclear company Oklo, giving
Oh
Oklo
no,
more
it's gonna tank.
flexibility to pursue partnerships with OpenAI or other hyperscalers, which might not have been possible with Altman at the helm of both OpenAI and Oklo. Now, Altman has been involved with the nuclear company, which makes small modular reactors for some time.
It's down 6%.
Oklo went public in May of 2024 via a merger with a SPAC backed by Altman. Now, last year, Oklo signed an agreement to provide power for data center developers.
Down
Switch,
6.5%, down
so
7%.
Far has not inked a deal with a hyperscaler. And
8%,
so this might
9%.
change that. The stock down here some 5%. Morgan?
Okay.
It's all over the place right now.
Stevens, thank you.
10%.
Looks like we're down about 6.5%.
11%.
Now let's get to today's market action. And there was a lot of action as we await Tesla results. Let's bring in Carson Group Chief Market Strategist Ryan Dietrich and Payne Capital Management Senior Wealth Advisor Courtney Garcia, along with CNBC's own Senior Markets Commentator Mike Santoli. Great to have you all here on a day where there's a lot of green on the screen. Ryan, I'm going to kick this off with you.
Did y'all notice they moved her to like a later segment? I do wonder if she's not as popular. I would almost argue she's not as popular, and it's not to slam her, okay? I'm sure she works hard and everything, but I'd argue she's not as popular as like the Sarah Eisens or the Steve Leisman or, the Rick Santoli coming in to yell at us about the data coming out, or even Kramer, right? Well, certainly Kramer. I mean, he's like the face of CNBC. But I thought that was really interesting. They keep moving her to like later and later slots. I don't know though. So, okay, Oklo's now down about 13%. And now what we're going to do is we're going to set up to see what's going on with Tesla. All right, so Tesla's going to be out in about 2 minutes. 2 minutes. So, 13% on Oklo now. Yeah, I mean, I really think, and I tweeted this, I'd argue the only reason people bought Oklo is because of Sam Altman. I know that's obviously an oversimplification, but I think it's true. So, all right. Who's ready? Who's ready? I'm ready. Oh, look, I could just use like 3 fingers and slide over really quick to the house hack pitch. See, househack.com, diversify away from tariff risk, rich valuations, diversify into American real estate, earn 5%, 100% of the upside on the stock, downside. That's kind of cool, househack.com. Anyway, that's kind of cool. I could just switch over that quickly. All right, Tesla earnings coming up, baby. Who's ready? I'm going to read them out as they come. All right, here we go. Tesla. 20 seconds. 20 seconds. Good luck if you have options, or frankly, if you own the stock. Oh, I see green needles, but I don't see numbers yet. It's up 3%, but I don't see numbers. Here we go. It's up 2%. No numbers yet. Where are the numbers? 2.5%. Still no numbers. I mean, that's a good early sign. Enphase missed. Enphase is out 68 cents versus 73. Q1 revenue, slight miss. Margin, slight miss. So Enphase missed across the board. And you don't. Okay, here we go. Tesla. Ooh, it's a miss. Adjusted EPS 27 cents versus 43. Bad. That's a big EPS miss. We will revisit our 2025 guidance in our Q2 update. No, wait, is that like later? As in like when do we get our Q2 update? Oh, that's bad. That's really bad. Rate of growth will depend on a variety of factors. Q1 revenue miss 19.3 billion versus 21.3 billion. Rate of growth will depend on a variety of factors. Tariff landscape will have a larger impact on the energy unit. That's where some of the big juice has been in terms of margins. Okay, this is interesting. The stock's bobbing and weaving around zero right now. Tesla Q1 EPS 12 cents. That's non-adjusted versus 34 cents year over year. So like a collapse, right? Gross margin beats. Gross margin beats. We got some good news, baby. Some good news. 16.3 versus 16.1. That's with credits. Also, this is big news here. Sufficient liquidity to fund our product roadmap and plans for new vehicles on track to start production in the first half of 2025. Okay, are we talking about the cyber cab that we saw yesterday with that casting? Probably. Uncertainty could impact demand in the near term. Q1 operating income. Oh my God, that's horrible. Q1 operating income was $399 million versus an estimate of $1.13 billion. Relative to the estimate, it's pretty bad. Okay, but it's okay. It's okay. You know, we knew this was going to be a rough quarter. Everybody knew that. So I don't know how these estimates were so high. Like, how do you have such high estimates going into this? This is these are some rough numbers here. But the stock doesn't care. The stock's up 2% right now. Tesla sees more affordable models lead to less cost reduction. Okay, I don't know what that means in terms of getting more affordable models. I think they mean like cheaper Model Y, Model 3s, right? Oh, they are leaving out the return to growth forecast from earnings. And they still see an increasing need for more energy here in the future. So this is interesting. It's really a report that it's a little bit of a mix. I don't see much good in this. The gross margin with credits is good, but otherwise it seems bad. You know, tariffs bad, EPS bad, no forecasts until Q2. Tariff uncertainty is going to impact demand. So far, all of that just sounds like trash. Okay, so that's just garbage. All right, so fine. Let's go to that's the Wall Street crap. Let's now go to the Tesla crap. In Q1, we finished our simultaneous changeover of production lines across all factories for the Model Y, which is good. You know, this is fantastic because what you're doing is you're without shutting down for a longer period of time, you're able to move over to a new model. That's nice. Ramp production lines across 4 factories while managing supply chains amongst 3 continents without major disruptions. That's good. AI is a major pillar of growth for Tesla and the broader economy and a key of our pursuit. AI infrastructure is driving rapid load growth, which along with traditional utility customer applications is creating outsized opportunities for energy storage products to stabilize the grid. This is good. This is positive talk about, here we go. Tesla sees robotaxi volume production starting in 2026. Okay, all right, that's good. That's good. You know, that's probably the framing that we saw. I don't know if that means we're going to start it this year. It probably does. If we're going to go volume next year, I think that's so far nothing new here. Current tariff landscape will have a relatively larger impact on our energy business compared with automotive. Now, that's actually surprising to me, but it probably is because of batteries. So I'm going to write that down. Oh, okay. Hold on a sec. All these other documents the Tesla document just crashed on us. When does that ever happen? I don't think that's ever actually happened on an iPad Pro. This is one of the newer models too. That's crazy. What are they putting in here? I just want to write some text. I just want to write. Oh, I go to write text and it crashes. What I was going to say, and I'm just not going to write text anymore. But what I was going to say is batteries are likely to come from China. At least some of these like structural packs, or not necessarily not the structural packs to be confused with cars, the like the mega packs, right? So I'm going to write down mega pack sourcing. So it seems like this works fine if I just write like this. So I'm going to go mega pack sourcing / batteries. That's some pretty bad handwriting, but that's okay. All right. Uncertainty in automotive and energy markets continues to increase as rapidly evolving trade policy adversely impacts global supply chain and cost structure at Tesla and our peers. This dynamic, along with political sentiment, could have a meaningful impact. I mean, that's CYA right there, because the political impact related to Elon Musk, right? We remain committed to expanding our business model to include delivering autonomous robots across multiple fronts, form factors, and use cases powered by real-world AI expertise. I will give it to them. I think Tesla has some of the best real-world artificial intelligence, right? In the face of near-term profitability hurdles, the low-cost, localized manufacturing base that we have built provides advantages in delivering the best products at the right price to our customers globally. Okay, fine. So where were our margins? So let's see here. We had margins with our vehicle credits at 16.3%, which is in line with last quarter, and obviously a lot lower than what you had in 2024, right? So margins in prior quarters were substantially higher. So we're definitely suffering a bit here on margins. But that's not a horrible surprise. Year-over-year decline of revenue of 9% relative to Q1 over here. That's pretty low. And if you compare it to Q4, it's substantially a miss here. I mean, compared to Q4, that is almost a 25% decline in quarter-over-quarter revenue. That's a substantial hit. Like, that's really big. All right, that's fine. No problem. Free cash flow, it's not negative, but it's certainly collapsed. So it's over, it's certainly grown over the negative that we had at the beginning of last year, but it's certainly collapsed from what we've seen previously. Okay, let's see here. Revenues, decline in vehicle deliveries. Of course, they're going to, to some extent, blame the Model Y update. And this is fair to an extent, right? To some extent, it is fair to bring that up. Reduced vehicle selling prices, that's a problem. Growth in energy storage, that's good. Oh yeah, what did we do in energy storage? Let's see here. Energy storage revenues. Oh, whoa, even those fell. I mean, it's not uncommon for them to fall from the fourth quarter, but it's a little bit of a bummer to see a fall. It's certainly up nicely year over year, though, right? In terms of energy, I mean, that's up nicely. Yeah, 67% here. Okay, fine. All right. Decline in vehicle deliveries, increase in operating expenses driven by AI and R&D projects, lower costs associated with the production ramp of the Cybertruck. That's good. Hey, stock's up about 1% right now. I think a lot of investors are looking at this earnings report and they're like, okay, like, is this the worst you got? And they're past this. It's kind of like what I talked about yesterday. Like, everybody kind of already expects a bad quarter. So who cares? Like, just get the numbers out. Like, let it be a kitchen sink quarter, right? Okay, we had some delivery numbers here. Gigawatt deployed. Okay, yeah. So, I mean, but then again, Q1 deploying almost as much as Q4, that's actually probably kind of bullish because usually Q4 is a big deploy season. So I'm going to actually say bullish on those energy deployments, though it is interesting for them to flag margins as more problematic in energy due to tariffs than vehicles. So I think that's interesting. Not really growing our supercharger stations or connectors that much anymore. 14%. This is really slowing down. Makes sense. We're not selling that many vehicles anymore in terms of like growth selling. So that's fine. Cybercab, look what we've got here. Cybercab listed as under construction at the Texas facility, as well as the Tesla semi-truck. And they put the Roadster back in here as being in design development. Okay. All right. Let's see here. Texas produced its 400,000th vehicle, long-range Cybertruck, starting at under 63,000 with incentives. Yeah, it's like 69.9 without FSD. And then obviously they still got, the tax credits are still around right now. I thought Trump was going to kill those like day one, and the tax credits are still here right now. Probably be part of their larger tax bill. Okay, expanding to Saudi Arabia later. We believe our approach to autonomy, a vision-only architecture with end-to-end neural nets, will result in scalable, safe deployment across diverse geographies and use cases. This was validated with the launch of FSD in China. Well, that's good. Which was achieved without access to country-specific training data. I mean, I think that's awesome. It's like you kind of just drop the cars in China. It's like, go. That's great. That's really good. It was probably just based on, U.S. training data. That's very good. Remain on track for pilot launch of robotaxi in Austin by June. Hey, that's good. This is really good right here. We remain on track for the pilot launch of robotaxi in Austin by June and builds of the Optimus on our Fremont pilot production lines this year. Also bullish. With wider deployments of bots on Twitter, doing useful work across our factories. That's great. Okay. Major benefit of our software-defined products is continual improvement in functionality of over-the-air updates. I agree with that. Adaptive headlights to prevent glare for other road occupants by selectively dimming individual pixels of the headlight. Wow. And the rear cross-traffic chime that emits a warning sound from the direction of a crossing vehicle while reversing. That a lot of companies do that. Okay, we launched an Inflation Reduction Act compliant 4680 cell, making the Cybertruck eligible for the $7,500 tax credit. That's nice. And let's see here. Onshoring of critical battery needs to the U.S. That's great. Energy storage deployments continue to grow on a 12-month basis. While sequential deployments are to remain volatile, we anticipate that expanding capacity for both Powerwall and Megapacks will drive continual deployment in the trailing 12-month numbers. Well, that's good. So, at one point we were thinking these might grow at like 50% per year or something like that. Okay, we achieved sequential record for Powerwall deployments, crossing 1 gigawatt for the first time, 1 gigawatt hour. Gross margin of energy improved sequentially. Let's see here. Mega Factory Shanghai did not contribute to quarterly deployments, although they did manufacture. Services grew 25% since to improvement in non-warranty maintenance and collision gross profit. Opened 1,800 new supercharger stalls, giving a 17% year-over-year growth. Again, slowing down on the superchargers. It'd be nice to see those move a little bit faster. But Donald Trump did pause the $3 billion going to, these electric charger expansions. So, Biden expanded it, Trump paused it, mostly because the money wasn't really flowing anyway. So it's difficult to measure the impacts of shifting global trade policy on automotive and energy supply chains, our cost structure, and demand. While making prudent investments that set up both our vehicle and energy business for growth, the rate of growth this year will depend on a variety of factors, including the acceleration of our autonomy efforts and the macro environment. We will revisit our 2025 guidance in our Q2 update. So in other words, they're going to kick the can down the road for a quarter. I wonder if this is like somewhat an Elon hint that we have one more quarter of pain. I'm going to write that down. I think that's actually interesting. Elon hint of one more quarter of trade pain. Like reading between the lines, Elon probably knows when the trade drama is going to be less so, right? And so, hey, we're just going to happen to delay our annual guidance until next quarter. I don't know. That's interesting to me. That's interesting. Everybody's going to make up their own mind on that. Just like everybody's going to make up their own mind. This is very normal. Everybody's going to have their opinion of how much you should diversify into House Hack, where you could get 5% on an annual yield, all of the upside in the stock, which is, in my opinion, selling for a discount, and it's private investment, and you're diversifying away from rich AI valuations. You're diversifying into American real estate, discounted fixer-uppers. We're buying the dip at the end of the year in dip markets. As I don't like buying in the spring. You all know that when it comes to real estate. I like buying when nobody else likes buying, in the heat of the winter. And you get to diversify away from the stock market as well. I think it's why in just like less than 4 weeks, we've raised over $4.5 million, and we're sitting on like $12 million of cash at the company right now, because people are like, yes, you're going to pay me 5% to diversify, and I don't have to risk, Trump defaulting on treasuries or the craziness of the stock market. Yeah, man, I'll fade some of the stock market gains for that. I'll take it. It's kind of interesting. brought to you by househack.com, now open to non-accredited investors. All right. So while we continue to execute on innovations and the cost of manufacturing and operations over time, we expect hardware-related profits to be accompanied by an acceleration of AI software and fleet-based profits. Well, that would make sense that you're able to sell more FSD. I don't think we have any information, though, on more adoption here. Plans for new vehicles, including more affordable models, remain on track for the start of production in the first half of the year. These vehicles will utilize aspects of next-gen platform. Yeah, okay, so, I mean, it's probably this more affordable model. It's, more affordable models. These are going to be cheaper, Y, Cybertruck, and 3. And then plans for new vehicles. This right here is separate, right? This is your Cybercab. And they think this is going to be, production in 2026, more full scale kind of production in 2026. I think if you divide this line out like this, it's a little bit more logical with what they're saying, and it's more consistent with what we've actually seen, not only in reports, but also in their behavior. So, okay, what is this? This approach will result in less cost reduction than previously expected, but enables us to prudently grow in a more CapEx efficient manner during uncertain times. This should help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling 60% growth over 2024 production by manufacturing in new manufacturing lines. That's optimistic, right? That's very optimistic. This is basically them saying, hey, man, like, we did 2 mil in, under 2 mil in 2024. We're probably going to be under 2 mil in 2026. Sorry, 5. But by 2025, I can't get the numbers straight. By 2026, we should actually be over, or maybe I'll just say close to, so squiggly equal, 3 million vehicles. That's bullish, right? That is a bullish statement. Okay, cool. Our purpose-built Cybercab will continue to pursue a revolutionary unboxed manufacturing strategy scheduled for volume production in 2026. Okay, cool. So let's see here. Let's see what else we got here. Oh, photos. Ooh, Giga Texas. Ooh, happy people taking pictures. Ooh, happy people. Well, mostly happy people. I don't know about this guy right here. She seems like she's uncertain about the decision, and I don't know. He told her to buy it or something. So I don't know. We got some happiness here. Some. All right. Okay. That's kind of cool. I think there's like some trade war uncertainty going on over here. Like, AI is about to take my job or something. All right. Anyway, so where were we? Okay. Oh, pretty pictures. Yeah. Okay. Happy people. Great. Cool. Yeah, go watch a movie while you charge your car because it takes so damn long. And you're probably waiting for a spot. They're still building this in LA, by the way. This the diner. That's going to be cool. I'll go to that. And I never go to LA, but I'll go to LA when that opens. I hate LA. Okay. The semi factory, we've seen this for months now. It's like, yes, we know you have a shell of a building. Like, I want to actually see semi trucks being built, because right now we're just building a building. Like, we're looking for tax write-offs. Okay, 5-star crash test. You guys got to work on the grammar, okay? Please, let's step up the grammar a little bit. There, I fixed it for you. When two words modify one. Oh, I'm not going to get into it. Okay. See, look. This looks like an American facility. They're all happy here, except for her. She's texting. I don't know what she's up to. But a lot of happy people over here. Cool. What do we got over here? Shanghai, first mega pack off the line. That's great. That guy doesn't know what camera to look at. Okay. All right, no problem. That's okay. It's hard. Oh, this is cute. We got the Fremont pilot production line. Quick, line up 4 of them and make it look like we're mass producing these bots. I mean, that's smart. That's a good picture. I like it. That's cute. I'd like to, shadow this office for a day. That looks pretty cool. All right, good. I don't really care about this because I'm going to look at the actual financial statements and see this stuff. So we looked at NGen, the energy generation. I want to see energy margins. How have those moved over time? So, and then remember, Enphase missed on everything across the board. We got to look at Enphase's numbers in just a moment too. They're down 9.6%, which again, like, you know, everybody knew Q1 was going to be crap hole. It was just going to be a matter of like how bad. I'm just surprised the analysts got these numbers so wrong on Tesla. Like, they were so off. And the stock's not even really moving yet. Okay, so anyway, energy margins, which these are usually pretty pumped up, 2289 divided by 3061. So, wow, why do I only have a 25% margin right now? So 25% margin, that has compressed. That's odd to me. Let's see here. Let me see. Maybe I'm wrong. Let me do the last quarter. Oh, well, oh, sorry. I just did that one. Okay, let me do this quarter. That was last quarter. My bad. Okay. This could be better. 1945 divided by 2730. Ah, it's better. 28.7. So that's good. That's more in line with what I was expecting. So that's good. So I like that. That's nice. SG&A declined a little bit. R&D, we see a slow ramp over here in R&D, at least here to here to here. So since about Q3, we're spending more money in R&D, which would make sense with the Cybercab and the Optimus. So that seems logical to me. Restructuring 94 mil. So they're just basically writing off sort of like a one-time non-recurring kind of restructuring expense. It's basically lost money when you look at restructuring. But the reason they say that is because they're like, look, this is money we're writing off that we don't think we're going to lose again. So it's like a non-recurring charge, right? Okay, all right. Net income, $420 million. Okay, let's go. You can't make this stuff up. But that's a collapse of net income. Am I on the right line here? Yeah, dude, look at that. Net income line. Wow. Look at that collapse of net income. Last year's net income was $1,400 million. Now it's 420. What happened? How did net income collapse? So that's fascinating to me. Collapse in net income. And part of that is due to income before taxes is like a fourth of what you've had previously. Do we have any kind of weird... I mean, we didn't have this huge bump of other income. I think this is when they recognized Bitcoin, revenues or profits from Bitcoin. But we didn't obviously have that this time. But also the gross margin was just trash here. It has to be because of a lower top line. Yeah, look at that. Well, hold on a sec. Yeah, gross profit. Wow. Look at that. That's a collapse of gross profit. That's not good for a growth company, right? So obviously there are hopes for shifting kinds of growth, but that's a collapse right now, at least. 4179 divided by 353. And I know we're comparing end of the year to new year, so we have to be fair about that. But still, this is a negative 25% gross profit collapse Q4 to Q1. Again, maybe it's because of the Q4 rush, to Q1. It's probably what it is. But that's a pretty big hit. It wasn't energy. Energy barely fell. Energy fell less than 10%. Most of it was autos. So I'm going to write that down. Mostly auto revs, which auto revs were down 12,925 divided by 18,659. Yeah, 31%. So that's a kick in the butt, right? That's a kick in the booty. Okay. So the earnings were not great. So just so you know what the expectations were. So EPS came in. This was 34 cents last year. So obviously a big hit there on EPS. And then we had the estimate for gross for Q1 operating income from operations. This estimate right here from Wall Street, I don't know how they effed it up this badly, but the estimate was $1.13 billion. Really not sure how they screwed that up that badly. And then the free cash flow estimate, which is going to be right here, not on the balance sheet. Let's see here. Cash from operating, capital expenditures. Free cash flow was 2156 minus 1492, 664. 664 free cash flow. The estimate was 1.08 billion. So I don't know who the analysts are writing up the Wall Street estimates, but you know, that was kind of messy. Still positive free cash flow though. Got to give it to them. Now, how are we doing on debt? You know, because people always like to talk about how much cash they have. But I always think it's logical to also look at and understand what's going on with their actual payables. So current liabilities, I have liabilities of $29.7 billion. How many of those are prepaids? Deferred rev. So I'm going to add back in 3.2. There we go. So 29,753 minus 3,243, because that's revenue we expect that they'll get. I have 26,510. 510 in bills. And then I have long-term liabilities of 11 plus 5.2. 5.2 plus 11. 16.2 of long-term. Long-term debt. Okay, which means in terms of free cash, I'm not going to use prepaid expenses. I personally don't use inventory. You could, because you would presume that's going to turn into cash. I'll use receivables though. So I'll go 3782 plus 36996, 40.778 bill. So I have free cash of 40.7. This is actually very good. 26,510. Oh, come on. 40.778 minus 26.510. I have free cash of 14.27 billion plus 11 bill in inventories. You know, so that puts you at roughly 25 bill free cash and inventories, right? That's pretty good. That's actually pretty good. Like the thing is, they can get through this, right? They have the money to get through this period. And that's probably why the stock is pretty damn stable around this 240 level, because like we knew this stuff would be bad, but none of this is like so offensive. There's really no secret in this. I don't think that that we weren't anticipating. So let's see what else we have here. And then we'll take a look at Enphase in just a moment too. So let's see if we can get margin X credits. Let's see here. Margin. Oh, are they going to make me do the math myself? I think they are. How rude. They always used to give it to us. How dare you put me to work? That's all right. We'll figure it out. Okay, fine then. Yeah, they usually put it in here. Automotive gross margin X credits. Fascinating. It's all right. No problemo. So cash flow, operating cash flow, that's fine. We talked about this, the AI. In the face of near-term profitability hurdles, the low-cost, localized manufacturing base that we've built provides advantages in delivering the best product at the right place globally. Okay, that's fine. Okay, we talk gross profit. All right, fine. Let's see what some of the suits are saying. Overall, this is not terrible. unlike Enphase. All right, let's see what we have here. So what do the suits have? Oh, that's interesting. Capital spending is actually down. I'm going to just write down some of the notes. So, although it's probably going to crash as I do that, I'm going to try it anyway. Oh. Cap. Yeah, how interesting. It's just bugged out. Yeah, there. Yeah, no. Cap. Yeah, okay, that's not going to work. Fine. Capital spending fell to, we'll write it down like this. Cap spend at a 1.49 billion versus 2.77 bill a year ago. Okay. Lithium refining in Texas is planned for the start of the year, this year. That's fine. Okay. Reading the shareholder deck again. It appears that abundance is the new favorite word. Oh, okay. Okay. It's a positive report in terms of outlook, says Morningstar. The more affordable vehicle is still on track and entering production by mid-year, and robotaxi testing is still on track. They didn't say that it would be a new vehicle, though. I really think that Elon killed the idea of a new vehicle. Now, somebody else might bring it back, but that's not what they said here. Because look, plans for new vehicles, Cybercab, what else? I don't know, semi-truck, or the Roadster, right? And then including more affordable models, which could be more affordable existing, right? We don't know. Technically, a $50,000 Cybertruck is a new vehicle because it's a more affordable model of an existing vehicle. So, like, this is where they've been toying with us, right? So there is a big opportunity. I'm going to write this down. Big opportunity to finally reveal a real, new, cheaper car. That's a huge opportunity for Tesla right now because there's too much of the, cheaper existing as well as versus Cybercab and equals nothing new, nothing actually new. That's what's bugging people. Like if they can reveal a new car and a new model, and I don't know, they call it the Model T or whatever the hell they want to call it, that would be huge. The stock would rally. And if you think about it, the reason the stock would rally, so let's write this down. I'm going to write down example given Model T equals rally. Why? Because you could get revenue up while you develop robotaxi and Optimus. That's what people want. They want some kind of like confidence that we're going to return to growth. Okay. Oh yeah, here it is. The X automotive margin was 12.5%. Okay, we got that. Tariffs will have a relatively large impact on the energy business compared to automotive. North America only made up 5% of lithium-ion battery production, while China makes up 84%. Wow. Yep, that's why we thought energy would have a higher hit. So I'm going to write that down because I do think it's interesting. So yeah, see, that's what we wrote down over here. Megapack sourcing /bats. Okay, so now we actually have data. So we have Bloomberg reporting that 5% of Li-ion bat equals North America, and then 84% China. Okay. All right. Let's see here. Capital spending fell. We saw that. Yeah, positive report in terms of, okay, yeah, I didn't see anything new in terms of whether we'd have a new car. Deck doesn't mention Musk, but does mention changing political sentiment. Okay. Stripping out regulatory credits, net interest income, and adjusting for other losses means they actually lost money. What? Hold on a sec. What kind of funny math is this? Hold on a sec. Hold on a sec. That just sounds like some fake news bear. All right. So, oh, they might be right. Look at this. Interest income, $400 million. Okay. Net income, $420 million. Now, obviously, you have provision for income taxes here. So you want to clean this up a little bit more. Go 399 minus 400. That's -1. But then add in the interest expense plus 91 plus 119. Okay. Well, hold on a sec. No. 399 minus 400 minus the 91 interest expense minus the other income expense 119 equals, wow, -211 EBIT. If you take out the interest income, interest expenses, and other income. That's interesting. No, but they're adding these back in. This is confusing. See, but these are negative. These are negative subtractions. See, their interest expense is actually negative. So that doesn't make sense. This is quite confusing. So anyway, I get what they're trying to go for. And this is always weird when they do these negative expenses here. Since those are negative expenses, they're actually adding to their income. Are they? I can't tell right now. Hold on a sec. Okay, 399. Okay, then I have interest income. Well, let me try this. Plus 400 minus 91. No, there we go. Minus 119 puts me at 589. No, there we go. Okay, yeah, no, I can minus this. So 399 plus 400. There we go. All right, we got it. 399 plus 400 minus 91 minus 119, which makes sense because of the parentheses being negative. We know that. But sometimes it's weird because when you have negative expenses, sometimes it gets confusing. It's like, wait, am I adding or am I subtracting, right? Because technically it's a negative expense you're telling me about. Anyway, weird. So 589 is now my income before taxes. So what you're saying is if I don't have any of these, we're basically negative. Yeah. So it's simple enough as saying like subtract this 400 out right here and you didn't make any money. That's interesting. Because then you're at 1 and then you subtract the others. Wow. Still a little blurry. Anyway, it doesn't matter. I'm over it. We get it. Okay. This is Wall Street being funny right now. Okay. Let's see what else. The company changed the status of its Cybercab semi, the first two in construction from design to develop. That's fine. Tesla has fighting talk China. That's fine. Okay. Blah, blah, blah. Refresh Model Y. Blah, blah, blah. Let's see here. Shareholder deck includes photographs of the Tesla diner. This doesn't matter. Plans for blah, blah, blah. Okay, we already read that. We saw the headlines, blah, 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 blah. Okay, none of this is new. The only thing that I got out of this is they want to hate on them for having a low income from operations, which is understandable. This is pretty damn low. And we picked up on that as well, just not, we didn't start minusing out their interest income. I get it. But the interest income has also been pretty stable. Right? Interest income here, 350, 348, 429, 442, 400. By the way, who's going to WrestleMania this weekend? It's like impossible to get a hotel in Vegas this weekend. Like, what is going on in Vegas? Anyway, I'm not going to WrestleMania. I'm just saying, like, wow, what's going on in Vegas? So, okay. All right. So this is Tesla. Now, the Tesla call will be coming up soon. But what I want to do is jump on over and do a little bit of Enphase, because Enphase is just like a royal disaster. So let's look at Enphase a little bit. Okay, there's a lot here. And then we'll want to write down some of these notes as well. Okay. Isn't there WrestleMania this weekend? Somebody says, I thought it was last week. Well, then what's this weekend? There's something going on this weekend where it's like impossible to get a hotel. I mean, they always have something going on. I thought it was like a second week of it or something. Maybe it is. Maybe it was just last weekend. Hold on a sec. You might be right that it was just last weekend. I don't really care. I'm just saying, like, whatever's going on in Vegas right now, it's crazy. All right. So let's do a quick little overview in terms of notes of some of the things that we wrote down here. Yeah, we'll do that in a moment. Let's go do Enphase first. So, okay. NFL draft is Thursday. Oh, that could be it. Okay, so Enphase, 80% booked to mid Q2 guidance. Okay, that's fine. Minimal impact on micro inverters from tariffs. Offsetting battery tariffs by Q2 26. So that means they have to move locations, basically. That's interesting. Looking to source batteries from outside China. Yeah, okay. Currently sourcing some batteries from China. Whoa, that's a big hit. Enphase sees a 6 to 8% gross margin impact due to tariffs in Q3 2025. And it's going to take them basically a year to switch. It'll take 1 year to switch chains. That's a lot. You know, and we'll do the Tesla earnings call soon too. Keep in mind the Tesla earnings call is, you know, in like what, 30, 40 minutes or something like that. So we've got some time to go through all this. Enphase says tariffs impact. Okay. Enphase sees 2% gross margin impact. Sees 2% gross margin impact due to tariffs in Q2. So they're definitely getting hit by tariffs. Channel inventory is a little bit elevated. That's not great. So remember, they sell to wholesalers, and when the wholesalers have elevated inventory, it means Enphase has to produce less. Elevated channel inventory, not ideal for new orders. Okay, I should say somewhat. Okay, then let's see here. Q1 microinverter. Oh, here's the Q2 guidance. Q2 guide is 360 mil. The original guidance was 377. Estimate was 377. So that's a miss of, it's about 4.5% miss. Miss on guide. Okay, interesting. Q2 margin, to be about 45.5. Q2 margin 45.5% versus 49.8% estimated. So they really got hit. Wow. Q1 adjusted EPS of 68 cents versus 73 cents expected. Okay. And then Q1 rev, 3,561 mil versus 361.6 mil expected. So they got closer on revenue, but just had a lower margin than expected, right? Like the time I want to own Enphase is right before the Fed panics. You know, when interest rates collapse, that's going to be great. But boy, right now, this is a tough time for Enphase. Let's get into the Enphase investor relations page, and let's just see what they're saying in their press release here. So let's see. Press release, first quarter. Cool. Enphase Q1 2025. And then remember, we're about 39 minutes away from the Tesla earnings call, which we'll be covering. And then after that, Tesla earnings call, obviously we'll do, summary on all this good stuff. And yeah. Okay, I'm pulling up the Enphase sheet right now, so give me just a second on that. By the way, I know some of you in the chat, I'll just try to consolidate it. Give me like 20 seconds here really quick. Some of you have been asking about where the morning alpha reports are. Everything that we do right now, everything is part of the Meet Kevin membership. So if you want to join that, check out the... everything's over there, meetkevin.com, all 8 courses, every trade alert, every private live stream, every alpha report. You get every course and you can join for, it's like less than $2 a day or whatever. It's a great deal for getting in at a lower cost, especially since you get access to all of the courses and you can cancel at any time. So check that out over at meetkevin.com. Okay, that's out of the way. Let's get into this. So this is the Enphase doc. Let's do a quick look through this. And then what we'll do is we'll go to the Enphase earnings or the Tesla earnings call. So global energy company, blah, 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 blah. All right, let's get to work here. Come on. We shipped 1.2 million microinverters and 22 megawatt hours of batteries. Yeah, but how many did Tesla ship? A lot more than that. Let's just look really quick, just for giggles. Let's just compare energy deployment here. Storage deployed. Oh, my Lord. 10.4 gigawatt hours. Now that's really interesting because they did 44 megawatts. Wow. Tesla, 10.4 gigawatt hours. That's insane in Q1. Wow. That's a huge difference. What is that, like 250 times? I think that's a 250 times difference because, 1 gigawatt is 1,000 megawatts, right? 1 gigawatt to megawatt. Yeah, it's a factor of 1,000. So 10,400 divided by 44 is 236x. I think that helps me relate this a little bit better, but that's 236x. That's insane. That's crazy. Okay. So free cash flow 33 mil. That's pretty good. All right. This is where we're getting the margin compression. Although you could see Q1 of last year was actually worse than Q1 of this year. And their net income was a loss last year. And they're actually positive right now, which is good. You want to stay positive here on Enphase. You don't want to be losing money here. Increase in revenue was primarily driven by higher battery sales. Revenue in Europe increased 7% for the first quarter. That's very good compared with the fourth quarter. Softening demand in the United States, partially offset by a safe harbor position. What the hell is that? $54 million safe harbor. Well, that sounds like some bull crap. Okay. Yeah, I'd love to know what the safe harbor is. Let's see here. And this is interesting. We also spent $12 million by withholding shares to cover taxes for employee stock vesting. Okay. Let's see here. Oh, that's interesting. More than 2,500 SunPower customers have transitioned to Enphase monitoring since the SunPower bankruptcy. I don't know how much money that's actually going to make them, but okay. Here's the outlook. We define safe harbor revenue as sales made to customers who plan to install inventory over more than a year. Oh, okay. All right. Well, that's fine because it's actually stuff that they sold and then they butter it out. Okay, that's fine because it's, like a wholesale company stocking up a bunch, basically. All right, that's fine. I thought it was something, you know, a little more BS-ish. That's arguable. I'll take that one. Gross profit, certainly higher than Q1 of last year. Restructuring and impairment, pretty low, good. G&A grew a little bit, not much. Sales and marketing shrunk a little bit. R&D, pretty stable. And these numbers are really stable, so I'm okay with that. Interest income, good. So we're making money over here. Net income. Obviously, then we've got income taxes. Net income, 29. So we're positive. Tough time for Enphase to get through. How much cash do we have to actually survive? So we've got $1.5 billion of cash. Okay, 1.5 billion of cash. I'm not going to include their inventory, some of this other stuff. That's fine. Payables, deferreds, I don't care. I've got about 330, 360. Current debt, damn, 630 plus 330. I got about 960 of debts. Dang, that takes a lot out. It leaves me with about $500 million. But honestly, I have enough cash to pay off all debt. That's pretty good. So, and then let's see what their cash burn is. Enough cash to pay 100% of debt. And then if they're cash flow positive, right, then we're in a good place. And we are. Yeah, cash flow positive right here. So that's about 34 mil of free cash flow. So that's good. So now you look at, you know, Enphase's valuation, and they're trading for like a 1 peg. Now, that could be because some of the growth estimates are too high for Enphase. I personally think some of the growth estimates are too low, but Enphase is really the play that you should make, in my opinion, not personal advice, but it's the play as interest rates start plummeting. You know, they're going to survive. So I'm going to write that down. They can survive, but buy when Powell freaks. And emergency cuts. That's when Enphase is interesting, you know, because that's going to be really what gets their revenue and their profit driving again. This is a low interest rate winner. You know, this is a very, very interest rate sensitive stock. Rate sensitive. Sense. I'll just put sense. Okay, good. So that gives us a little glimpse into Enphase. Great company, just bad timing. That's just the way this company is. That is what it is. Okay, let's go back to Tesla here for a moment. See what else we have with the good old Teslers. So Tesla, let's see. Okay. One of Elon's planes just landed in San Jose. We can't know if it's Elon on the plane, but the call is in 40 minutes. That would make sense. He'd have just enough time to get to Palo Alto. If he just landed in San Jose, I've flown into there. He'd have plenty of time to get to Palo Alto, even with traffic. It should take him like, what? San Jose Airport to Palo Alto, 20, 25 minutes, if that. San Jose Airport. Let's see. San Jose directions. Palo Alto. 23 minutes. Damn, that was a good estimate. So he, you know, as long as he gets his butt off the plane, and apparently he landed like 8 minutes ago, so he'll be fine. He's gonna like walk in the room literally like 5 minutes before the call begins. Hey guys, look at my chainsaw. Okay, it's gonna be very interesting. Remember how he said he wasn't going to be on the earnings calls anymore unless they were important? And I think he only sat out like one earnings call. So I think he's coming. Is the Enphase call going on? Okay, let me see. I mean, we may as well listen to something, right? Let's see here. Okay, so yeah, if it is, I'm happy to listen to it. And then we'll switch over to the Tesla one in about 29 minutes. So, okay. Yeah, maybe he's making an announcement on leaving Doge. That's true. That is a possibility. Okay. Anyway, while I pull this up, I just want to take the opportunity to say thank you for being here and hanging out. All right, there we go. So let's see here if the Enphase one's cooking. Enphase earnings call. Enphase. I'm gonna have to log in through their investor relations page, which is fine. We'll do that really quick. Okay. Conference call. Oh, their webcast actually started a while ago. It started 30 minutes ago. Oh, that's perfect. And we could just like 2x through the juice of it. Oh, that's great. Okay, cool. So we'll have plenty of time to mess around with it. There we go.
Therefore, turns out for us that whether we make it domestically or whether we make it outside the US, our costs are becoming approximately the same.
Okay.
And the cost impact is significant.
Ooh, that's not good.
Why did we chose? Yes, we are going to pass a portion of it. We are going to absorb majority of the impact. And why is because, first of all, we think we can recover this effect in a couple of quarters, in 2 to 3 quarters. That's what we mentioned. And what are we doing about it? Our job number one is to get cell sources outside China qualified. That's the job number one, which we have already identified the sources. We are working in aggressive task force mode, and we expect to qualify these sources early next year. Therefore, considering that the impact is going to be only for a couple of quarters, 2 to 3 quarters, not couple of quarters, 2 to 3 quarters, we decided we would pass on a portion to the installers, and we would absorb the majority ourselves.
Yeah, that's why their margin's getting hit so badly. I mean, so far, it sounds like these tariffs are horrible for them. Mind you, Enphase gets a lot of batteries from China, so I don't know if they're going to be able to switch that easily. It doesn't sound good, honestly.
Because we have pre-tariff inventory. Then from Q3 onwards, that basically goes away. And we essentially are going to have an impact of about 6 to 8% as a result of all of these actions. We expect that impact, the gross margin impact, to continuously improve as we go from Q3 to Q4 to Q1, and the impact to become zero in Q2.
Got it. That's very helpful. And then just, right or wrong, there seems to be a bit of paralysis on the customer side as we wait for clarity.
Mind you, also, that sounds like exactly what Donald Trump wants. Like, Donald Trump is like, yeah, bring the production to America. And they're kind of like, okay, we will.
Over-owned or...
Oops.
Nova exposure in the guide. And then maybe on the flip side, do you think that sell-through could accelerate in the second half once we get IRA clarity? I guess, what are you hearing from your dealers on any pent-up demand? Thank you.
Yeah, I said a few things. I said my bookings right now is about 80%. So the guidance that we gave, we have accommodated that bookings in place, which is actually healthy. So that's the first thing. Yes, the lack of certainty is definitely a factor. The one of the large national lease providers, as you mentioned, in financial trouble is another factor. What that financial trouble causes is basically our installers have difficulty in managing their cash flow. When our installers have very difficulty in managing the cash flow, the originations suffered in Q1. Because the origination suffered, we do not see enough pull-through from the distributors to the installers. Because as you must imagine, life must be pretty tough for them in terms of cash flow. But the good news is there are a lot of lease financiers now today compared to what there were 2 years ago. So it is a matter of time where those installers pick up the alternate financiers and hopefully restart the business again. However, that basically created a gap in Q1, and that's what we talked about. Our sell-through was a little lower than normal. Having said that, we are entering the best seasonal part of the year. Q2 normally is the best in terms of seasonality. Q1 to Q2 is what I'm talking about. And for Enphase specifically, what we have going for us, we expect to ramp our 4th generation batteries in Q2. We expect to ship meaningful volumes in production this quarter. And we basically, we expect that our cost for our backup installations will be equivalently as good as, grid, almost as good as grid type. We have done a great job in gaining market share till now on our batteries, supporting grid-tied installations with our 3rd generation. This presents a huge opportunity for us to capture the backup market as well with a solution that is low cost. Earlier, we used to have a lot more.
I mean, we'll see, because Tesla's competing in it as well,
Now, those will get significantly lesser because of 2 things. One is we have the collar. The second is we have a 10 kilowatt hour battery now instead of a 5 kilowatt hour battery. So specifically to Enphase, we are well positioned to capitalize on the battery market. We also, the clarity in terms of the policy will definitely give us a boost in the latter half.
Thank you.
And your next question today will come from Phil Shen with Roth Capital Partners. Please go ahead.
Hi, all. Thanks for taking my questions. You talked earlier, Badri, about the margin trajectory as we get through even the first part of next year. Can we talk about what the revenue cadence might look like? So for Q3, is $375 million on the table? Would you expect Q4 to be up quarter over quarter or down? And if you feel like you can share even Q1 of next year, that would be fantastic. Thanks.
Right. Phil, you know that we normally don't guide for Q3 or Q4, but we have a few vectors going for us. I just talked about the 4th generation system. We believe that's a huge factor for Enphase. Then we, specifically regarding the US, we have the IQ9 that is going to be turning on in Q4. Then coming to Europe, all of the new products, we have introduced a large array of new products, which we are already seeing some good traction, namely the FlexPhase battery, which provides 3-phase backup for many countries in Europe, the balcony solar, which basically we are about to introduce it this quarter, so it's no longer something out there. It's going to ramp in this quarter. Balcony solar is going to address, for example, the TAM in Germany alone is 400 megawatts.
Yeah, balcony solar is like having 1 or 2 panels on your balcony to help feed solar power and backup power to your apartment. It's not like a high revenue driver, but it is a source of revenue in Europe. You don't really see that in America so much.
In Q2. And the next one is our IQ EV charger, the latest EV charger.
Who cares
did a
about
good
the
job
EV? I don't care about the EV charger.
so that we can service all 14 countries in Q1. And now we got to grow from strength to strength there in terms of installer partnerships and EV charger partnerships in general through other companies there. So while the policy situation etc. is uncertain, Enphase is trying to control our destiny by introducing new products, by having discipline, and these are the new product vectors that we are relying on for growth.
Okay, thanks, Badri. Back to margins for a bit here. You talked about, I think, the down 6 to 8% or 6 to 8% impact on Q3 margins. I think you mentioned that was the net impact. Can you share what the gross impact is on tariffs on Q3?
Well, no, and I don't have the gross impact. All we are saying is we are passing a small amount of percentage increase to the customers. We are taking a number of other actions to, like for example, we do have some work that we can do on the raw materials for the batteries, moving them out of China. So all of that work is going to happen. Those are what I call as improvements. A lot of vectors there, 1,000 little things we are going to do in order to continuously improve our gross margin impact.
And your next question today will come from Brian Lee of Goldman Sachs. Please go ahead.
Hey guys, good afternoon. Thanks for taking the questions. I guess first question would just be, it sounds like you're passing through a little bit of the price on the tariff impact on batteries in the back half of the year. So you've been doing pretty well, 170 megawatt hours of shipments quarter here to start the year. You've never had that kind of strength in the first half. Second half usually better, but given tariff impact, uncertainty, and maybe a little bit of price you're having to pass through, like what's the view on shipment volumes for battery storage in 3Q and 4Q? Can you continue to grow into the second half? I guess that's also in the context of a new battery ramping. So just wondering kind of what's the volume view on top of what's happening with respect to cost and margins.
Yes, I mean this is a great battery. First of all, our third generation system was 5 kilowatt hours. Fourth generation system is 10 kilowatt hours. We had separate battery management, separate power conversion in the third generation system. We have combined it, and it's got deep level of integration, combination of power conversion as well as battery management, resulting in cost decline. And then we are talking about the balance of system. In the balance of system, we have eliminated what was called the system controller in the third generation. And now we have eliminated that box, replacing it with a small meter collar, which is trivial to install. So bottom line, what I'm trying to tell you, Brian, is that the system cost for the Enphase install with backup is going to be significantly reduced. And yes, the battery itself might go up a little bit in pricing, but the overall system cost reduction is quite good and quite tremendous. So we expect to continuously grow on batteries. We also expect to continue to grow on batteries in Europe. For the first time, we have had three-phase backup, a full three-phase backup. And that was not available so far. I told you about the Germany.
Okay, quick heads up. I'm just going through some of the Tesla numbers again. We only had $399 million of EBIT on 19.3 billion of income. That only worked out to a 2% margin. Now, obviously, some of that is going to be R&D, right? R&D was about 1.4, but even if you add all of the R&D back in, just to try to get an idea of like the profitability of the business right now, 1.4 plus 399 puts you at about 179. If I divide that by the 19.335, that works out to about 9.3 margin, net margin without any R&D. That's interesting to look at that way.
I think pre-tariff, you guys were talking about doing something in the, close to 35% gross margin on battery storage. If you kind of back out the 6 to 8 percentage point tariff impact in the back half here, it implies, battery storage margins are going to be zero or negative, definitely negative in the U.S. So to get to, back to kind of that 35% level, which I think you're inferring by Q2 of 2026, like how gradual is that, or is that all just going to happen in like a quarter or two as you basically switch to non-China suppliers? It sounds like over Q1 or Q2, or is it all going to just happen in Q2? Maybe a little bit more color on the cadence, please. Thanks.
Yeah. So basically, I told you about the impact in Q2 being small, which is clear. So the remaining quarters left. I also told you, Q2 26, I told you the impact is zero. So we are talking about 3 quarters, basically. And in these 3 quarters, the efforts we are going to be engaging are two things. One is we are going to move the cells, the source of cells to, outside China and multiple sources. That's what we are already working on. Then the second is any raw materials used in the batteries, which we use. A lot of raw materials that are sourced from China, those also we need to move away to low tariff countries. And as you imagine, that the latter activity is a continuous activity. And the cell activity can turn on quickly, but that might need about 3 months to ramp. So basically, my guidance to you is these numbers are rough numbers. They're 6 to 8% impact in Q3, but every quarter, Q4 25 should be better than Q3. Q1 26 will be better than Q4 25, and Q2 26 should disappear to zero.
And your next question today will come from
11 minutes to go for Elon. So far, Enphase down about 12% here.
Very much. So Badri, I just want to confirm on that last point with the battery adjusting the supply chain. The raw materials, the pack, it's still the same LFP, chemistries, right? Or is there any redesign or recertification that would be needed of your product? And would that be added on top of this timeline that you're talking about through 2Q of 26?
Yeah, the good question. It is the whole point is to keep our LFP. We are not moving away from LFP. So, and also the trick is how do we do this without redesigning everything? And so, right now our plans is mainly associated with the cell. However, the normal qualifications will be required because cell is the most basic entity of the battery, and we need to make sure we do the appropriate qualifications.
Okay, that's great. And then just kind of near term, wanted to go back to the 2Q guide. You said you're 80% booked into the midpoint of the guide. And I think you mentioned this in the past. It's been closer to 85%, at least the last couple of quarters. Just kind of your thoughts on going with that 80% number instead of 85. Just kind of what gives you the confidence to go with that
higher
Yeah,
number?
last quarter we reported 2 weeks late. That was February 4th. This time, this is April 22nd. So we are fine. Their 80% is good. We expect to be 100% booked soon.
Thank you.
And your next question today will come from Colin Rusch with Oppenheimer. Please go ahead.
Thanks so much, guys. Given the VPP functionality that you guys can enable, as well as some of the analytics, can you talk a little bit about market share gains? How you're seeing that sales process evolve, and whether you're using price as a lever to pick up market share a little bit here as you go forward.
Yeah, hey Colin, this is Raghu. When you think about battery sales, as well as actually EVSEs as well, it's now more than just batteries being used for providing, resiliency or time of use, peak shifting. What you're seeing is this new value proposition that adds on to it, which is using your batteries to provide to either to participate in energy markets, in deregulated markets, or a VPP construct where the utility can use your battery and discharge it and pay you for it. And so at the end of the day, what that means is just improves the ROI for the homeowner and reduces the payback period. So the better that you can do it is actually a value proposition. You can be better than the competition. What I mean by that is providing very high quality APIs for your partners, and that they can then drive the battery and discharge the battery as needed, charge the battery as needed, and participate in energy markets. And all of that value proposition, which is good for the homeowner, is the value proposition also that drives the adoption of your battery. So if we do it better than our competition, then clearly, we gain market share. And that's what we are driving towards. We see that number of our partners buy our batteries because of our VPP and market steering capabilities.
That's super helpful. And then just from a logistics perspective, it looks like there's going to be some disruption in and around container ships. Can you talk a little bit about how you guys are mitigating that risk and what you're seeing in early returns on?
Okay, quick news that might be pushing markets up a little bit right now. Donald Trump just said the Fed should lower rates. We would like the chair to be early or on time. No intention of firing the Fed chair. I want Powell more active on rates. This, in my opinion, is overall bullish just for the broader market because it gives some confidence back to U.S. assets. So this is a good thing. All right, let's keep listening.
Make sure we're paying attention to all of those softer costs.
Yeah, I mean, we do already see we make, maybe all of the folks do not know on this call, 85% of our microinverters are made in the U.S. today. 85% of our global microinverter shipments are from the U.S.
That's big.
So already there is a healthy logistic train of raw materials, etc., coming into the U.S. so that we can make our microinverter. So we don't expect any changes to that because we have diversified that well, and we have not had any problems with logistics so far. On batteries also, 40%, I would say, we shipped 170 megawatt hours in Q1. 44 megawatt hours were made in Texas, approximately 25%. So how that works is we ship cell packs into Texas. We make microinverters in Texas. We make battery management in Texas. We make the enclosures at another state in the U.S. We make the chassis also in a neighboring state. So therefore, what is once again important there is the raw materials for making all of those. And our supply chain is, we established this over 3 to 4 quarters ago. So for us, this is, although it is a disruption, for us, it is not, it's not that we have to learn everything from scratch. We have already ramped up on a few areas. And we expect that 44 megawatt hours, which I said of US making batteries, we expect that to keep going up as we proceed into the year.
Thanks, guys.
And your next question today will come from Christine Cho with Barclays. Please go ahead.
Good evening. Thank you for taking my question. I was wondering, could you remind us what the manufacturing plans were for 10C? I thought the initial rollout was going to have the US inverters shipped to China and then assembled there and shipped back to the US before all this tariff news, and then the domestic content version was going to come out later. So first of all, is this correct? And if it is, are you changing these plans so that you're not importing the full battery into the US, which will be subject to a higher nominal tariff? And if that's the case, does this impact the rollout of 10C at all, if you do have to change plans?
No, it does not roll out the impact of 10C. We are starting with the non-domestic version, and that is correct. They are, the microinverters for the non-domestic version will be made in the US, and the rest of the battery is made outside the US, but being shipped in. But we are quickly, in about 2 to 3 months' time, we will quickly realign the supply chain to have the domestic content product also available for the 10C. So, right now, whatever we plan to ship in the second quarter will be the non-domestic version.
Okay, so we're going to get ready to transition over to Tesla here. I just want to be clear. I'm looking at the indices and after hours, and futures just turned pretty damn green because, in my opinion, of what Trump just said. In fact, I bet you they announced it right here.
Runs away with things. No, I have no intention of firing him. I would like to see him be a little more active in terms of his idea to lower interest rates. This is a perfect time to lower interest rates. If he doesn't, is it the end? No, it's not. But it would be good timing. She could have taken place earlier. But no, I have no intention to fire him. I don't want to comment on that. That doesn't matter.
Mr. President, when can we expect the FC?
That's big. That's actually a big thing. So that's good. That's what we want. You want confidence in U.S. markets. So there is a pump in after hours because of this, which is good. So, in case you're wondering, why are we seeing the green candles? That's big. Okay, that's a good thing. Probably because somebody finally told Trump to stop saying that stuff. Market sold off pretty heavily on Monday because of these shenanigans. Anyway, let's just listen in a little bit more here to the Enphase live, and we're going to be switching over in about a minute to Tesla.
I'm not getting to the number. Let us say I ship 30 megawatt hours of the 4th generation battery. That would come with a little more tariff, compared to the inventory that we will have on the 3rd generation tariff. Hence, we guided to the 2% there. That's all.
Okay.
And your next question today will come from Andrew Percoco with Morgan Stanley. Please go ahead.
Great. Thanks so much for taking our questions. I do just want to, again, come back to this battery storage.
Tesla testing the 24769 line. Pretty powerful line right there with 250.
95% of LFP cells come from China. So, presumably a lot of your competitors and peers are also trying to get their hands on the supply you guys are working on. So just curious how you see the cost environment for that, non-China supply evolving over time, and the conversations you've had with some of those suppliers. And then, second to that, just trying to figure out when you talk about getting to a 0% gross margin impact by the second quarter of 2026, how much of that is dependent on just completely exiting China from an LFP perspective versus taking action on price? Just trying to get a sense for breakdown there. Thank you.
Yeah, 95% of LFP cells in China. Yes, that's right. Don't forget that there are some Korean suppliers who do make NMC.
That's what I wrote down. NMC. That's so funny. I literally wrote down they're going to try to go to South Korea. That's too funny. So in other words, they don't really know where they're going to go yet. Maybe they'll go to the Korean suppliers. That's funny. Okay, is our Tesla call live yet? It's getting there. Okay, we're gonna close out Enphase. All right, we just have tech music going on for Tesla right now. So we are standing by now for the Tesla call. And there you go. Yeah. All right, good. Good. It's going to be juicy. We're going to knock this out together. Yeah. Like the good old days, right? Here's Tesla, by the way. Look at that. It's like a perfect rejection right there at 247.69. This, by the way, has nothing to do with Tesla. This pump right here is because Jerome Powell doesn't look like he's going to get fired by Trump. So we'll see if we can hold it. I mean, we'll take it, right? Like, it's fine. Take it. But it's a good thing. And then in the meantime, as we're getting ready, remember, we have the House Hack non-accredited investor round open, so you can diversify into American real estate, diversify away from the frothy stock market valuations or AI valuations, diversify away from most of the tariff risk, and diversify away even from long-term treasury yield risks. Instead, you could earn 5% on an annual basis with us, plus 100% of the upside in the stock. So, if the stock doubles or triples or 10x's or whatever, you get all of that. And 5x through conversion with some downside protection. So consider that. Check out househack.com. You can see all our properties, and we've got some real buy-in we're doing in Q3, Q4 here. We can't wait for that opportunity. All right, let's see if we're starting here. Nope, still got the techno music for the Tesla financial results. So still waiting here. Don't want to play too much of it because it'll get us canned off of YouTube. We could listen to a little bit of CNBC for a sec.
But I also asked him about tariff rates overall, and the Treasury Secretary's comments earlier today that the tariff rates, as high as they are, amount to effectively an embargo on trade with China altogether. The president says he does agree with the Treasury Secretary that it is effectively an embargo with China right now, but he doesn't think that tariff rates are going to stay where they are right now. He said they're going to come down significantly. I asked him to what level. He said not to zero, but he implied sort of north of zero, but much lower than where they are now. So this is a president, Melissa, I've got to say, who seemed eager to send the kinds of signals to the stock market that the stock market wants to hear right now, to be very conciliatory about the Fed, and very much to indicate that he's in deal-making mode with China, Melissa.
What's interesting, Eamon, is what you said about the president saying that he wouldn't comment on the status of talks with China, although Secretary Besson earlier in the day said that talks have not started. I'm wondering why there's daylight between the two explanations.
Well, reporters tried to press the president in the Oval Office just now on, what updates can you give us? Have you talked to Xi Jinping? Have you had any meetings? And where are these discussions specifically? And the president just sort of kept going back to his argument that there is going to be a deal. Things are going well with China.
He's asked me if my Cybertruck rattles. No, it doesn't. No problem.
But no real specifics in terms of where those negotiations stand, who's meeting with who, what dates the meetings are taking place on, whether there have been any offers exchanged, just the president asserting that he feels confident that there will be.
Yeah, if you hear me fading in this, that's the earnings call. Okay, I'm just checking.
He declined to answer that question.
All right, Eamon, thank you so much. Eamon Javers from the White House at this hour. Again, we're looking at an after-hours rally on top of the gains that we made in today's session on these comments regarding President Trump having no intention of firing Jerome Powell, and also the positive comments he's making about China in terms of resolving the trade embargo that is in place right now.
Yeah, all good.
Somebody's asking me if I brought my Cybertruck back in to glue on the side panels for the recall. No, I'm too lazy to do that. Mine's been fine. I'm not saying there won't be a problem, but so far it's fine. I've actually really enjoyed the Cybertruck. And I feel sad that if there were this much negativity around Teslas, I may not have bought it, because I feel afraid of taking this to like LA because some psycho is going to key it. And the money was going to suck because that's going to cost like $4 or $5 grand to fix. It's the time. I don't want to spend the time fixing it. But then I can't, if somebody keys a swastika on it, I can't drive it around anymore. So it's just psychotic, it's really sad. But yeah, so that like in hindsight would probably have affected my purchasing decision, which is really sad because it really shouldn't. Come on, Tesla earnings call. Come on. So still waiting for this call to begin here. Keep in mind we've still got the Meet Kevin membership, the alpha reports, and the course member live streams. We do those every single day. So in case you've been missing those stock market open live streams and watching the market open up, the trade ideas we do at the open, a news analysis of the morning, earnings call analysis, fundamental analysis. You can be part of it every day the market is open. Just join the Meet Kevin membership over at meetkevin.com. You get every single course now. It's literally just one thing, all bundled together. Make it easy for you.
Due to a number of risks,
here we go,
including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon will be providing an update. Elon?
Hello, everyone. Well,
here
it's
we
never
go.
a dull moment these days.
Yeah.
One thing's for sure, every day is going to be exciting. As some people know, there's been some blowback for the time that I've been spending in government with the Department of Government Efficiency, or DOGE.
Okay, you gonna quit?
I think the work that we're doing there is actually very important for trying to rein in the insane deficit that is leading our country, the United States, to destruction. And the DOGE team has made a lot of progress in addressing waste and fraud. The natural blowback from that is those who were receiving the wasteful dollars and the fraudulent dollars will try to attack me and DOGE team and anything associated with me. So then I'm really left with two choices. Should we just let the waste and fraud continue? Was continuing at it to grow at a really unsustainable
Just hire
pace
somebody else
that was bankrupting the country, or to fight the waste and fraud and try to get the country back on the
hire
right
someone
track.
else.
And I believe the right thing to do is to just fight the waste and fraud and get the country back on the right track. And working together with President Trump and his administration. Because if the ship of America goes down, we all go down with it, including Tesla and everyone else. So I think this is this critical work. Now, the protests that you'll see out there, they're very organized. They're paid for. They're obviously not going to admit that the reason that they're protesting is because they're receiving fraudulent money, or that they're the recipients of wasteful largesse, but they're going to come up with some other reason. But that is the real reason for the protests. The actual reason is that those receiving the waste and fraud wish to continue receiving it. That is the real thing that's going on here, obviously. So now that said, I do think there's the large slug of work necessary to get the DOGE team in place and working in the government to get the financial house in order is mostly done. And I think starting probably in next month, in May, my time allocation to DOGE will drop significantly.
There we go. That's
I'll have to
good.
continue
Look at the
doing it
green.
for, I think probably the remainder of the president's term, just to make sure that the waste and fraud that we stop does not come roaring back, which we'll do if it has the chance. So I think I'll continue to spend a day or two per week on government matters for as long as the president would like me to do so, and as long as it is useful. But starting next month, I'll be allocating far more of my time to Tesla. And now that the major work of establishing the Department of Government Efficiency is done. So at Tesla, we've gone through
That's very good.
Many a crisis over the years, and actually been through many near-death experiences. like we felt like we were on the ragged edge of death, at least on maybe a dozen times. It's been so many times. This is not one of those times. We're not on the ragged edge of death, not even close. So, but there are some challenges, and I expect that this year will be there'll probably be some unexpected bumps this year. But I remain extremely optimistic about the future of the company. The future of the company is fundamentally based on large-scale autonomous cars and large-scale, in large volume, vast numbers of autonomous humanoid robots. So the value of a company that makes truly useful autonomous humanoid robots and autonomous useful vehicles at scale at low cost, which is what Tesla's going to do, is staggering. I continue to believe that Tesla, with excellent execution, will be the most valuable company in the world by far. But that's an important if. We must execute well. But if we do execute well, I think Tesla will be the most valuable company in the world by far. It may be as valuable as the next 5 companies combined. So, but there'll be a few bumps along the road before that happens. I said, I think on the last earnings call that we'll start to see the prosperity of autonomy take effect in a material way around the middle of next year. Well, we still expect to be selling fully autonomous rides in June in Austin, as we've been saying for now several months. So that's continued. But the real question from a financial standpoint is, when does it really become material and affect the bottom line of the company, and start to be a fundamental part of when does it move the financial needle in a significant way? That's probably around the middle of next year, second half of next year.
Okay,
and then
bullish.
Once it does start to move the financial needle in a significant way, it will really go exponential from there. So I'd encourage people to look beyond like the some sort of bumps and potholes of the road immediately ahead of us, but lift your gaze to the bright, shining, citadel on a hill. I don't know, some Reagan-esque imagery, and that's where we're headed, and not too distant future, like I said, end of next year type of thing. So, let's see. With respect to supply chain risk, something that Tesla has been working on for several years is to localize supply chains. This actually makes sense from a cost standpoint, and from a logistics risk standpoint. Is to have the supply chains be at least located on the continent in which the car is built. And so we are, I think, the least affected car company with respect to tariffs, at least in most respects. I mean, it remains to be seen. Now tariffs are still tough on a company when margins are still low. But we do have localized supply chains in North America, Europe, and China. So that puts us in a stronger position than any of our competitors.
Okay, bro.
And undoubtedly, I'm going to get a lot of questions about tariffs. And I just want to emphasize that the tariff decision is entirely up to the President of the United States. I will weigh in with my advice with the President, which he will listen to my advice, but then it's up to him, of course, to make his decision. I've been on the record many times as saying that I believe lower tariffs are generally a good idea for prosperity. But this decision is fundamentally up to the elected representative of the people, being the President of the United States. So, I'll continue to advocate for lower tariffs rather than higher tariffs, but that's all I can do. So now let me walk you through why I'm so excited about the future of Tesla. So first of all, autonomy. The team and I are laser focused on bringing robotaxi to Austin in June. Unsupervised autonomy will first be solved for the Model Y in Austin, and then actually we should parse out the terms robotic taxi or robotaxi and just generally like what's the Cybercab, because we've got a product called the Cybercab, and then but any Tesla, which could be an S3, X, or Y that is autonomous, is a robotic taxi or robotaxi. It's very confusing. So the vast majority of the Tesla fleet that we've made is capable of being a robotaxi or robotic taxi. As we're going from, once we can make the system work where you can have paid rides fully autonomously with no one in the car in one city, that is a very scalable thing for us to go broadly within whatever jurisdiction allows us to operate. So because what we're solving for is a general solution to autonomy, not a city-specific solution for autonomy, once we make it work in a few cities, we can basically make it work in all cities in that legal jurisdiction. So once we can make it basically work in a few cities in America, we can make it work anywhere in America. Once we can make it work in a few cities in China, we can make it work anywhere in China, likewise in Europe, limited only by regulatory approvals. So this is the advantage of having a generalized solution using artificial intelligence and an AI chip that Tesla designed specifically for this purpose, as opposed to very expensive sensors and high precision maps of a particular neighborhood where that neighborhood may change or often changes, and then the cost stops working. So we have a general solution instead of a specific solution. Yeah. And with regard to Optimus, making good progress on Optimus. We expect to have thousands of Optimus robots working in Tesla factories by the end of this year, doing useful work. We expect to scale Optimus up faster than any product, I think, in history, to get to millions of units per year as soon as possible. I think feel confident in getting to 1 million units per year in less than 5 years, maybe 4 years. So by 2030, I feel confident in predicting 1 million Optimus units per year. It might be 2029. So let's see, with respect to energy, our energy business is doing very well. The Megapack is
they're doing that
enables,
so that analysts can do math on how many robots to calculate. It's actually smart for Elon to say.
The case. When you think of the energy capability of the grid, it's much more than say total energy output per year. If the power plants could operate at peak power for all 24 hours, as opposed to being at half power or sometimes a quarter power at night, then you could double the energy output of existing power plants. But in order to do that, you need to buffer the energy so that you can charge up the something like battery pack at night and then discharge into the grid during the day. So this is a massive unlock on total energy output of any given grid over the course of a year. And utility companies are beginning to realize this and are buying in our mega packs at scale. So at this point, a gigawatt class battery is quite a common thing. So we have many orders in the hopper for gigawatt and beyond batteries. And we expect the stationary energy storage business to scale ultimately to terawatts per year. So very, very good numbers. Now, Q1, first quarters of a year are usually pretty tricky because it's usually the worst quarter of the year because people don't want to go buy a car in the middle of winter during a blizzard. So, we picked Q1 as like a good quarter to do a cutover to the new version of the Model Y, and we changed production of the world's best-selling cars. Worth remembering, the Model Y is the best-selling car of any kind on Earth, with a 1.1 billion unit per year output of a single model. And we did this changeover at the same time in factories all across the world. So congratulations to the Tesla team on an amazing job in pulling off what is a very difficult transition. So yeah, it's really, that was very impressive work. So yeah, in conclusion, while there are many near-term headwinds for us and the broader industry, the future for Tesla is brighter than ever. The value of the company is delivering sustainable abundance with our affordable AI-powered robots. So I like this phrase, sustainable abundance for all. If you say, like, what's the ideal future that you can imagine? That's what you'd want. You'd want abundance for all in a way that's sustainable. It's good for the environment. Basically, this is the happy future. If you say, what's the happiest future you can imagine? One that would be a future where there's sustainable abundance for all. Closest thing to heaven we can get on Earth, basically.
Hey, where's the company update? Is that it?
So thank you again to the Tesla team for all their efforts at this challenging time. I look forward to continuing to lead the team to great success in the future.
Great. Thank you very much, Elon. Before we move on, Vaibhav has some opening remarks as well.
Thanks, Elon. As Elon mentioned, in Q1, we achieved something which has never been undertaken in the automotive industry of updating all our factories for the best-selling car in the world all at the same time. And this people don't understand, this was not a small feat. We're not aware of anybody else being able to do the best-selling car all at once within a quarter, and that too hitting all the timelines which we had established at the beginning. So big kudos to the team for making this happen. Additionally, we also hit a record gross profit for energy storage business in the quarter. Now, getting back into the business, there's been a lot of speculation as to the reasons for decline of our vehicle deliveries in the first quarter. We had previously guided that we will be updating all factories, and this would lead to several weeks of lost production, which did happen as planned. The ripple effect of the change is not having enough new Model Y available in most markets for people to see and experience till the last few weeks of the quarter. Additionally, the negative impact of vandalism and unwarranted hostility towards our brand and our people had an impact in certain markets. Despite this, we were able to sell out legacy Model Y in US, China, and a few other markets within the quarter. And again, just so people understand, we were producing the legacy Model Y till middle to end of February. And we switched over and we were able to still sell out within that period. So again, big achievement by all the people at Tesla to make it happen. We have a very extremely competitive vehicle line.
Oh, somebody thinks I changed it to the Enphase call. Come on, man, that's not nice.
And after that, advances in FSD, you have a personal chauffeur which can take you almost anywhere under supervision. There are numerous stories shared by customers ranging from how it has improved their daily commute, to providing mobility to customers with disabilities, to giving older customers the ability to travel comfortably and independently. Not only is FSD supervised safer than a human driver, but it is also improving the lives of individuals who experience it. And again, this is something you have to experience, and anybody who has experienced just knows it. And we've been doing a lot lately to try and get those stories out, at least on X, so that people can see how other people have benefited from this. Now, coming into some of the financial stuff, auto margins declined sequentially, primarily
some financial stuff.
A reduction in the total number of deliveries, lower fixed cost absorption due to factory changeovers, and lower regulatory credit revenues, offset by a slight increase in pricing due to the launch of new Model Y, despite incentives which we had to sell legacy Model Y. Our energy storage business, like I said before, has achieved yet another milestone of great highest gross profit in the quarter. This was despite sequential decline in deployments. The importance of this business, as Elon mentioned, is pretty profound, especially in this environment, because if in order for grid to work properly with the demands from AI and all this, you need some more stability. And this is by far the simplest and best solution which we are aware of, which can help do this. And we've also developed certain unique solutions to help our customers to achieve this. Additionally, on the Powerwall side, we've been selling the new Powerwall 3, and it's been received with very good reception from customers, and to the extent that we are currently supply constrained. On services and other margins, they were slightly down sequentially, primarily because of the pressure on our used car business and insurance business. Note that we continued our journey to improve profitability in our services and collision business through better labor productivity. As previously discussed, our operating expenses continue to increase sequentially, primarily due to our AI-related initiatives, including Optimus, and also cost of development for our vehicle programs, including Cybercab, Semi, and cheaper models. These expenses flow through R&D. We believe, even in the current environment, it is the right strategy in making investments in these areas to position us for the long term. These increases were offset by decreases in SG&A from changes in our vehicle referral program. Other income reduced significantly on a sequential basis. The primary reason was Bitcoin mark-to-market loss in Q1 versus gain in Q4, resulting in a $472 million drop. The remainder of the change is because of FX remeasurement. With the adoption of the new mark-to-market standard for Bitcoin, we expect increased volatility in other income in addition to the FX volatility. I know tariffs is the hottest topic which people talk about, and it has various impacts to our business. As Elon mentioned, on the vehicle business, we've been on this journey of regionalization for years. Specifically in the US, Model Y has been rated the most American model-made car on Cars.com Made in America Index 3 years in a row. This in part is of all the work which the team has been doing over the years. And to the extent that today, if you look at our vehicle lineup in US, we're about approximately on a weighted average basis, 85% USMCA compliant. So like Elon said, this definitely gives us a bigger edge as compared to our other OEMs in terms of managing the tariffs, but we're not immune because when the Section 232 auto tariffs become effective in May, which includes Canada and Mexico, and Canada and Mexico has been part of our regionalization strategy, they will have an impact on profitability. And I know research modeling on this impact has been about a couple of thousand, which is pretty much in line with what we've been forecasting. The impact of tariffs on the energy business will be outsized since we source LFP battery cells from China. We're in the process of commissioning equipment for the local manufacturing of LFP battery cells in the US. However, the equipment which we have can only service a fraction of our total installed capacity at Lathrop. We've also been working on securing additional supply chain from non-China based suppliers, but it will take time.
A couple things not so good there. Canada and Mexico have been part of our regionalization strategy, and we source our LFP batteries from China. Both of those oopsies.
From tariffs on the energy business, we do have Mega Factory China, which just started operations in Q1, and that should take care of our business outside of US. There's also an important impact of tariffs on our capital investments. I know this is going to sound counterintuitive since in order to onshore manufacturing or expand lines, we have to bring equipment from outside the US because there is not that much capacity in the US. And the current trade environment, such equipment being brought in is subject to
the expense of bringing it in from China right now.
Exactly. And the reality is that China has the basic one which has the most capacity to provide this. Our CapEx guidance, inclusive of model tariffs, even with the optimization we have tried to do, it is forecasted to be still in excess of 10 billion this year. And we're still evaluating what more to do on this thing. To summarize, we have near-term challenges in our business due to tariffs and brand image. We think our strategy of providing the best product at a competitive price is going to be a winner. And this is the reason we're still focused on bringing cheaper models to market soon. The start of production is still planned for June. Additionally, the advancement in FSD-related features, including pilot robotaxi launch in Austin later this year, should help create a new era of demand. I would like to thank everyone at Tesla and our customers.
Fantastic. Thank you very much, Vaibhav. Now we will move on to investor questions. We will start with questions from say.com. First question is, what are the highest risk items on the critical path to robotaxi launch and scaling?
Okay.
It is Ashok.
Yeah, we've got Ashok on.
Sure. Well, just to clarify the just disambiguate the cyber cab from robotaxi once again. When will the Teslas, because the Teslas that will be fully autonomous in June in Austin will be Model Ys. So that is that's currently on track to be able to do paid rides fully autonomously in Austin in June. And then to be in many other cities in the US by the end of this year. It's very difficult. It's difficult to predict the exact ramp, sort of week by week, month by month, except that it will ramp up very quickly. So it's going to be like basically an S curve where it's very difficult to predict the intermediate slope of the S curve, but you kind of know where the S curve is going to end up, which is the vast majority of the Tesla fleet being autonomous. So that's why I feel confident in predicting large-scale autonomy around the middle of next year. But, certainly the second half of next year, meaning I predict that there will be millions of Teslas operating autonomously, fully autonomously, in the second half of next year. Yeah. It does seem increasingly likely that there will be a localized parameter set where sort of like that the especially for places that have, say, very snowy weather, like say if you're in the Northeast or something, that like there's, you can think of it's kind of like a human. Like if you could be a very good driver in California, but are you going to be also a good driver in a blizzard in Manhattan? You're not going to be as good. So there is actually some value in, you can still drive, but your probability of an accident is higher. So it's increasingly obvious that there's some value to having a localized set of parameters for different regions and localities. But this is I'll put that in the nice to have category. It's not the required category. Again, really the car is just very much like a human. It's digital neural nets and cameras, and humans operate with biological neural nets and eyes. And so the same strengths and weaknesses will be present for a digital neural net and cameras versus a biological neural net and eyes. Ashok, if you'd like to elaborate on that.
Yeah, and speaking to the location-specific models, we still have a generalized approach, and you can see that from deployment of FSD supervised in China, where with just very minimal data that's like China-specific, the models generalize quite well to completely different driving styles. That just like shows that the AI-based solution that we have is the right one, because if we had gone down the previous rule-based solutions or like more hard-coded HD map-based solutions, it would have taken like many years to get China to work. You can see those in the videos that people post online themselves. So the generalized solution that we are pursuing is the right one that's going to scale well. And you can think of this like location-specific parameters that Elon alluded to as like a mixture of experts. And if you're sort of like familiar with the AI models like Grok and others, they all use this mixture of experts to sort of like specialize the parameters to specific tasks while still being general. This makes the model use limited amount of compute to solve for the diversity of tasks that it has to solve. In terms of addressing the question that asks for, what are the critical things that we need to get right, one thing I would like to note is validation. Self-driving is a long-tail problem where there can be a lot of edge cases that only happen very rarely. Currently, we are driving around in Austin using our QA fleet, but then it's like super rare to get interventions that are critical for robotaxi operation. And so you can like go many days without getting a single intervention. So you can't easily know whether you're improving or regressing in your capacity. And we need to build out sophisticated simulations, including neural network-based video generation. That's all happening in the background to make sure that we deliver a safe product and we are able to measure our safety, even though we can't just like see it by driving around the block or something like that.
In very basic terms, if we're seeing an accident every 10,000 miles, well, then you have to drive 10,000 miles on average before you get an accident or an intervention. So it's like, okay. Now imagine, I mean, we must be really, people must be very worked out by the sheer number of Teslas doing circuits in Austin right now. We're like, well, it's going to look pretty bizarre.
Yeah. Some people are chasing us away. Right now.
Yeah. There's just always a convoy of Teslas going just going all over to Austin in circles. But yeah, as I just can't emphasize this enough. in order to figure out long tail things, if it's 1 in 10,000, let's say it's 1 in 20,000 miles, or 1 in 30. Now the average person drives 10,000 miles in a year. So now try to compress that test cycle into a matter of a few months. That means you need a lot of cars doing a lot of driving in order to compress that, or just do in a matter of a month what would normally take someone a year.
Yeah, and
exactly.
I would just also add that, if you haven't looked at those videos coming out of China, people are
those videos are amazing.
They're putting it to real test. I mean, they're taking to dirt roads.
Frankly, I think the Chinese consumer might be the most demanding consumer, and I actually, our customers in China are awesome. They have a lot of fun with the cars. I saw one guy take a Tesla on autonomously on a narrow dirt road.
Yes.
Across like a mountain, and I'm like, still a very brave person. And the Tesla's driving along on a road with no barriers, where if he makes a mistake, he's going to plunge to his doom. But it worked.
Great, thank you.
And if the question was on CyberCab itself, we're in B sample validation now.
Yeah, we should ask that question too.
Yeah, we have our first big builds coming at the end of this quarter, within Q2, and then in the coming months we start to large scale installation of all the equipment in Giga Texas, with still on schedule for production next year.
Yeah, and I just want to also clarify, because I think people don't understand. They think that there is no new building being built, and where is CyberCab going to
No,
be?
it's in the Giga.
It's within the same factory.
Yeah.
It's happening and people don't know it's just happening upstairs and all along the lines, while we're still building the Model Ys and Cybertrucks every day.
Yeah, it's worth noting that the Tesla Gigafactory in Austin is 3 times the size of the Pentagon,
including the garden.
Yeah, including the Ground Zero garden. So I go visit the Pentagon. I'm like, this building used to look big, but anymore.
Great. Thank you very
Okay,
much.
board, come on.
The next question is, when will FSD unsupervised be available for personal use on personally owned cars?
Never.
Before the end of this year.
Oh,
Not necessarily. Let's say within the U.S. Like we do want to test. Like we're at Tesla, we're absolutely hardcore about safety. We go to great lengths to make the safest car in the world and have the lowest accidents per mile, and fewest lives lost. So we want to be very careful. So we want autonomy to be definitively safer than manual driving. So it's not enough that it just be as safe. It needs to be meaningfully safer than if it's cars manually driven. So and we want to confirm that there's not something. We just want to be cautious with the rollout. We don't want to jump in at the deep end with an army. So, but that said, I think we should be able to have it work in several cities later this year for personal use. The acid test being you should be able to can you go to sleep in your car and wake up at your destination. And I'm confident that will be available in many cities in the US by the end of this year.
Great, thank you very much. The next question is Tesla still on track for releasing more affordable models this year? Or will you be focusing on simplified versions to enhance affordability, similar to the rear-wheel drive Cybertruck?
We're still planning to release models this year. As with all launches, we're working through the last minute issues that pop up. We're knocking them down one by one. At this point, I would say that ramp might be a little slower than we had hoped initially, but there's nothing, just kind of given that turmoil that exists in the industry right now. But there's nothing that's blocking us from starting production within the timeline we laid out in the opening remarks. And I will say it's important to emphasize that, as we've said all along, the full utilization of our factories is the primary goal for these new products. And so flexibility of what we can do within the form factor and the design of it is really limited to what we can do on our existing lines rather than building new ones. But we've been targeting the low cost of ownership. Monthly payment is the biggest differentiator for our vehicles. And that's why we're focused on bringing these new models with the lowest price to the market within the constraints I just highlighted.
Interesting.
Thank you very
Low
much.
monthly payment. So those could be low cost existing style models, just lower versions.
Yeah. And as you approach the Austin launch, how do you expect to compare against Waymo's offering, especially regarding pricing, geofence?
Somebody needs to ask that. Like an analyst actually needs to drill down on this. It's so vague.
The issue with Waymo's cars is it costs way more money.
Oh.
Rim shot. What a fun. But that is the issue. The cars are very expensive, made in low volume. Teslas are, I don't know, probably cost a quarter or 20% of what a Waymo costs, and made in very high volume. Ironically, we're the ones that made the bet that a pure AI solution with cameras and audio, the car actually will listen for sirens and that kind of thing, is the right move. And Waymo decided that an expensive sensor suite was the way to go, even though Google's very good at AI. It's ironic. And it is worth noting that Tesla's built an incredible AI software team and AI hardware chip design team. From scratch, from nothing. We didn't acquire anyone. We just built it. So, it's really, I don't see anyone being able to compete with Tesla at present. I'm sure that'll change eventually. But at least as far as I'm aware, Tesla will have, 99% market share or something ridiculous. That 90-something percent, at least, at least some of them might change, but if we have millions of cars deployed next year, and unless others have millions of cars deployed, we'll have, unless we're blocked by regulatory situations, it won't be long. In a few years, we'll have 10 million autonomous cars on the roads, then, and counting.
The other thing which people forget is we're not just developing the software solution, we are also manufacturing the cars.
Yeah.
And what Waymo has, they're taking cars and then trying to put
way more money.
We don't do that. So that definitely gives us a big leg up. And like Elon said, we already have a big existing fleet, which hopefully with the software update could become autonomous.
With the software update, it will become autonomous. To be clear, the Model Y that we're talking about in being autonomous in Austin in June are the Model Ys we make currently. There's no change to it.
I think people don't appreciate that the car which they can buy today,
the car that they have,
or the car they have, is capable of these kind of things.
In fact, it does drive autonomously from the factory to the end of line, every car.
Yeah.
Nowadays.
Every sector through the tunnel, the Model Ys, everything.
Right.
Yes.
Exactly. We have. It is being put to use. It's doing useful work fully autonomously at the factories, as Ashok was mentioning. The cars drive themselves from end of line to where they're supposed to be picked up by a truck to be taken to the customer. And I'm confident also that later this year, the first Model Y will drive itself all the way to the customer. So from a factory in Boston and our one here in Fremont, California, I'm confident that from both factories, we'll be able to drive directly to a customer.
And I'll throw some miles on it, but it might be cheaper than shipping it, right? You might save $1,000, might be worth it.
Literally goes from the end of line and drives itself to your house.
It's important to note in the factories, we don't have dedicated lanes or anything. People are coming in and out every day trucks delivering supplies, parts, construction, for
Well, and people can film it. By the way, you can see this from the road. Like it's not covered.
Exactly.
In this videos, people take videos online, and anyone who wants to go see it can just drive past our Fremont factory and see the autonomous cars driving themselves. And they drive themselves and they put themselves in the exact right spot to be picked up.
Yeah, the logistics yard is right there in the open.
Yeah.
We don't move it again to another lane.
But they go to a specific parking spot.
Yeah.
Yeah. So that's just a routine, like everyday thing now.
Great, thank you very much. The next question is, can you please provide an update on the unboxed method and how that is progressing?
Sure. It's progressing, absolutely. As I mentioned just a minute ago, like it is the basis for our CyberCat manufacturing process. It's really what we changed in order to allow the low cost of production and also get the super high levels of automation. Really levels of automation that are sort of unheard of in the vehicle manufacturing scale. It's like not something that when you see it be produced, you'll think of in terms of like, wow, that's how a car has been built for 100 years. It's really something we've changed. In the past year, we've been like focusing on a lot of key development areas, like marrying these large sub-assemblies together in a precise way, in an accurate way. We've also de-risked things like corrosion of uncoated aluminum structures, the sealing across the seams of the vehicle, and when you marry assemble components. And we've even done early crash testing and proven that it's going to be just as safe as every other car we built. And so with all that combined, we kind of go into the builds that we have at the end of this quarter for the CyberCat product, and that's the next real big test of full scale, integration of the unbox process. And it's kind of where we are. So you'll see them in test and on the test roads in a couple of months.
Yeah. And although the line won't be upset at this rate
initially,
this is a revolutionary production system. I'm not sure what the right word is. Unboxing sounds like something like when you get your phone.
Yeah, you open it up.
Yeah, you have like a pleasant experience when you take your phone out of the box. But which of course is nice, but this is much more revolutionary than that. This is a profound reimagining of how to make cars in the first place. No car is made like this anywhere in the world. The factory is the product as much as the car is the product. So it's really just the first principles approach to manufacturing that will ultimately allow us, I think, I'm confident ultimately it'll allow us to achieve a cycle time, meaning a unit every 5 seconds or less off a single line.
And we want to incorporate some of these for testing it into our existing production lines as well for those with line Cybertruck already.
This is something I've been thinking about for a long time, and I've sort of been thinking about this for a long time, and it's kind of it's not a crazy thing. Like a car every 5 seconds may sound like it's coming out like bullets, but actually it's coming out at walking speed.
It's like a meter a second.
A meter a second. So this is like we're still far away from caring about the aerodynamic drag of the manufacturing line. Because you're still at 3 miles an hour type of thing. Every 5 seconds sounds crazy, but it's 3 miles an hour. That's what we're talking about. So you can run away from it basically. But that's still by far the fastest line on Earth. It's like half order meg. Like I don't know. What's like the best single line on Earth? It's like about
Shanghai Phase 2.
And that's us.
33 seconds.
Yes.
And we're the fastest, right?
I would think so.
We think we're the fastest at 33 seconds in our Shanghai factory, but this would be 6 times faster or 7 times faster thereabouts. So it'll be slower than that at first, but the point is that like when you fully optimize the design and operation of the next generation factory that we're building right now, a 5-second cycle time or less is the design is capable of it. So if you like when you go through like a radical new architecture, you go from like being like an A. I mean, I'd say like probably Shanghai in particular is an A plus on a moderately, an advanced but still traditional car production system. Sort of, they're really doing about as good as possible to do within a conventional scenario. So trying to get much below, sort of below like 30 seconds, extremely difficult. But if not, and you start getting into sort of impossible, where you have to be faster than a human could possibly move. So then the autonomous line, it really just needs to be robots moving really fast, and that's where you get to sub 5 seconds. But we'll start off with getting a C in, instead of an A, getting a C in a new architecture. But then the potential is there over time to move that up to an A plus within an A plus architecture.
Great, thank you very much. The next question is, how is Tesla positioning itself to flexibly adapt to global economic risks in the form of tariffs, political biases, etc.?
As Elon said, we've been supply chain team been at it for a while. We continue to mitigate global economic risks like tariffs and political biases by regionalizing part supply near its factories in North America, Berlin, and Shanghai. For example, in North America, our high-volume vehicle programs have over 85% North America content, and Shanghai vehicles have over 95% local content. Berlin has similar levels of regionalization as North America when you exclude the battery, and we are working on regionalizing the battery as well. This is a pre-pandemic strategy that we accelerated post-pandemic through supply diversification, dual sourcing, vertical integration, advanced analytics, and local partnerships to ensure supply chain resilience and production stability. Having said that, we are not 100% insulated, and these tariff risks are higher on our low volume platforms than the high volume ones.
Yeah. In fact, there's no more vertically integrated car company than Tesla. I mean, we're the most vertically integrated car company since, Henry Ford back in the day when they were doing mining iron and stuff, and growing rubber trees. So, we're not growing rubber trees and mining iron yet, but we have built a lithium refinery in South Texas, and it's the biggest lithium refinery outside of China, I think. Is that right?
Yeah, I think so.
Right.
Once it's started.
Yeah, but its output potential would be the biggest lithium refinery outside.
Yeah, and we've got space to expand it if we need to build more.
Right. So, and then we've got the cathode refinery in Austin next to the Gigafactory. We've got to figure out what to do about the anode. It's an ongoing subject of discussion. The best of all possible worlds would be figuring out how to have no anode. Best anode, best part being no part. That's the dream of the lithium batteries, to be anode, not have an anode. But either way, we better have the anode, the cathode, and the lithium, and the electrolytes, and the separator to make a cell. But there's no other car company that is building lithium refineries and cathode refineries. We're ridiculously vertically integrated, and thus our best position to protect against supply chain disruptions.
Yeah.
Why do you want to talk about the progress in the front?
Yeah, certainly for our in-house cells, we've multi-sourced every component, and we have every part coming from at least 2 different countries of origin, which is that we started this, the supply chain team and the engineering team worked together on this for the last couple of years to put that together. It's not something we did in a couple of months. This is years of work. So we're in a good position to take advantage of that, and the insourcing of lithium and cathode, they're the 2 most critical parts of the battery. That's right in our backyard, and we're totally insulated from.
Well, it needs to be in operation.
It needs to be in operation. Once they're running.
We also make our own cells, by the way. So cell production. If you look, there's you make the anode, the cathode, the lithium, the electrolyte separator, the can, and then you got to put all that together in the cell factory. There are entire companies that all they do is produce cells, but they don't do the other stuff. They don't refine lithium or the cathode so our cell production is going quite well, and I think we're currently sort of the lowest cost per kilowatt hour.
Yeah, for all the cells we purchase in North America.
Yeah, so it's
lowest cost to us.
Yeah, so we have the lowest cost per kilowatt hour, all things considered. So the Tesla cell is the most competitive cell. For a kilowatt hour put into a car, if it's a Tesla cell, it's lower cost than if it's a supplier cell.
Yeah, and the plan this year is to really build off that base. Getting to lowest cost is it's the hardest challenge for cell manufacturing. It's relatively easy to build a flashy product that does one thing well. To build something at high volume and low cost is super difficult, and we're kind of using that as a base to then build off and add performance in different areas for new products coming out.
Yeah. So
Yeah, I mean, to Elon's point, there's a lot of advantages for regionalization. The most important thing is we're not tying up working capital for 6 to 8 weeks on the ocean. If there's a design change, then everything that's in transit basically has to be scrapped. Secondly, port disruptions, as we saw during COVID, can be very expensive because slight disconnects can shut down production. So then your only option is costly air expedite. It also gives us resilience in supply chain. If one region is down, we can bridge with others. It's more work to set up in the beginning, but it's critical to have when the need arises. Having said that, it's unrealistic to assume 100% regionalization across the board for specialized areas such as semiconductors. In such cases, our team works very closely with our partners to ensure we have strategic banks in place and a disruption doesn't impact production while we stand up the regional manufacturing for that particular commodity.
And I'll say like on the rest of the vehicle, like Elon was talking about with cells, we're also heavily vertically integrated, import ingots, and turn them into castings. We recycle those in melt centers. The same thing with plastics, but it doesn't mean we're not exposed. We do have some areas where we use rare earth magnets, and we've been working for years to find alternative sources and bring those up, as well as we have our induction machines. And as we've mentioned in the past, we're working on our ferrite motors for some time. So like, as Karn said, with our heavy regionalization percentages, we're definitely like the lowest, exposed to this, but we're not completely immune, as Bob mentioned in his opening remarks.
Great. Similarly related, on the battery side, does Tesla still have a battery supply constraint, as noted on the Q4 call, and does that change with tariffs?
So this is Karn. We've been working very hard to expand battery cell production in the U.S., both with vendors and what Bonnie mentioned earlier with the 4680 program. And we're also working on moving the upstream supply chain for battery cells to the United States for several years. And that strategy is really starting to pay off now. As it stands right now, we're not constrained on battery cell supply for vehicles. The recent tariffs do pose some challenges to Tesla Energy, like our CFO mentioned earlier, but it's something we've been anticipating and we should be able to resolve in a timely fashion. We actually have a plan in place and we're executing towards it. We also have some other sources coming online to supplement the shortfall. And then, of course, we have the L3 production that's happening in-house. We have a slight disconnect of aligning the right cells with the right packs. So that's the little bit of puzzle that we have to solve internally. But as far as cells go, there's no shortage.
Great. Thank you very much. The next question is, did Tesla experience any meaningful changes in order inflow rate in Q1 relating to all of the rumors of brand damage?
So in Q1, as mentioned earlier, we took the best-selling car of the last 2 years and ramped up all 4 of our global factories. And in less than 8 weeks, we've gone to the rate of our previous Model Ys, the factory.
Answer.
So just kudos again to the team for the great job there. And despite the economic strain and negative articles that in California in Q1, Tesla remained the best-selling car, not just EV. Additionally, we had a record number of test drives globally in Q1 as well. So interest remains high.
That's good.
And so right now we continue to see, good good interest still in the vehicle.
Yeah, I mean, Tesla's not immune to sort of the macro demand for cars. You know, so when there is economic uncertainty, people generally want to pause on buying, doing a major capital purchase like a car. But you know, as far as absent macro issues, we don't see any reduction in demand.
Correct. And that's where we continue to focus on affordability, and it's a fundamental focus there.
Yeah, fantastic. Thank you, guys. The next question is regarding the Tesla Optimus pilot line. Could you confirm if it is currently operational? If so, what is the current production rate of Optimus bots per week? Additionally, how might the recent tariffs impact the scalability of this production line moving forward?
No, Optimus, I just want to emphasize, Optimus is still very much a development program. It's not a large volume production. That's why, this year, we'll make a few. We do expect to make thousands of Optimus robots, but most of that production is going to be at the end of the year. So almost everything in Optimus is new. There's not like an existing supply chain for the motors, gearboxes, electronics, actuators, really anything in the almost anything in the Optimus, apart from the AI for Tesla, the Tesla AI computer, which is the same as the one in the car. So when you have a new complex manufactured product, it'll move as fast as the slowest and least lucky component in the entire thing. And as a first order approximation, there's like 10,000 unique things. So that's why anyone who tells you they can predict with precision the production ramp of a truly new product doesn't know what they're talking about. It is literally impossible. So you go through this like series of constraints where it's like this part's the limiting factor, now that part's the limiting factor, now this part's the limiting factor, and multiply that by 1,000 basically. And then the rate of the production ramp is decided by how quickly you can solve each of those problems. Now, Optimus was affected, by the magnet issue from China, because the Optimus actuators in the ARM do use permanent magnets. Now, Tesla as a whole does not need to use permanent magnets, but when something is volume constrained, like an ARM of the robot, then you want to try to make the motors as small as possible. And then, so we did design in permanent magnets for those motors, and those were affected by the supply chain, by basically China requiring an export license to send out any rare earth magnets. So we're working through that with China. Hopefully we'll get a license to use the rare earth magnets. China wants some assurances that these are not used for military purposes, which obviously they're not. They're just going into a humanoid robot. So it's not a weapon system. But that is an example of a challenge there. But I'm confident we'll overcome these issues, and we'll, by the end of this year, have thousands of Optimus robots.
Great. Thank you very much. And the last question we already covered earlier, whether robotaxi was still on track for this year. So with that, we can move on to analyst questions. The first question is going to come from Pierre at New Street. Pierre, please unmute yourself.
Hey guys, can you hear me?
Yeah.
That's great. So I'm super excited to hear robotaxi and Optimus becoming the very tangible future for Tesla. But I have actually a question on the legacy, not the legacy, but the current auto business. And when I look back at the ramp of Model 3 a few years ago, I really saw it as being the iPhone of cars, a new product, completely reinvented, very different user experience, vastly superior, impossible to match for traditional competitors. And for the iPhone, it resulted in the high end of the smartphone market quadrupling in size, and actually Apple taking 60% market share. And so when you look at the Model 3 and the Model Y today, I think they are still like really vastly superior to any other cars. And I wonder why they've taken about 15% of their addressable market and not more, actually. So another way to put it is, why are there so many people still buying BMWs and Mercedes, knowing that the Model 3 and the Model Ys are out there and available? And I wonder if you're trying to solve that riddle internally, if you understand why, what are these auto buyers who are not buying a Model 3 or a Model Y missing? And if you have ideas of things you could do to address that, maybe there is enormous value left on the table there. That's what I'm wondering these days.
Yeah, the reality is that in the future, most people are not going to buy cars. So it's kind of what one could sort of say. Look, if you think want to continue with your phone metaphor, you can remember the days of the flip phones when there was 100 different flip phone designs, and I would the mistake that manufacturers made was to try to make many different variants of a flip phone, but which was a mistake. They should have made the iPhone. Because obviously everyone's going to want a smartphone, but in the beginning of when the iPhone came out, I was like, wow, I can't believe these guys are not reacting as though this is death. But they didn't. They kept making variants of flip phones. Nokia, I think at one point was the most valuable company in the world, or close to it. But they kept making flip phones. Trying to find another market niche. Maybe somebody wants a phone of a different style, maybe this different color or whatever it is. Nope, they just want a super intelligent phone that can do everything. Just one. So, I said this many years ago. In the future, in the not too distant future, buying a gasoline car that is not autonomous will be like riding a horse while using a flip phone. Some people still do it, but it's rare.
Great. Thank you. The next question comes from Emmanuel Rosner at Wolf. Emmanuel, please unmute yourself.
Great. Thanks for taking my question. So Elon, the public version of the FSD software still has a decent amount of, intermittent human interventions that are required. So what's still required for the software on your end to get to a level where it doesn't need to be supervised? And I'm asking that in the context of, obviously, the June launch being in the next couple of months. What still needs to happen?
And we are working on a number of items to improve the robustness. Yeah. We are aware of the interventions that are happening in the public builds, and that's why we are hardcore burning it down. And really just picking some initial launch city helps us focus on solving all the issues that you'd face here. For example, just focusing on Austin, we're not solving all the issues that customers in Boston or somewhere else might face. And then here, we just have a big list of all the issues, just burn it down. And that's what the team is working on, along with other redundancy issues. For example, if one of the computers goes down right now in the customer fleet, it would throw the red hands and ask you to take over, but we don't want that kind of situation. So you're solving both the reliability issues of the autonomy software and also the reliability issues of the system software together for Austin.
Yeah, really we just worked through a long tail of unusual interventions. And these are really very rare. Like as I was saying earlier, If you have intervention every 10,000 miles, I mean, that's a lot of driving you got to do to even find one case where that happens.
Yeah, and some interventions
But
are
the
happening due to systematic, like missing functionality. For example, for handling emergency vehicles correctly, you don't need to consume audio as an input. But then the customer-facing versions don't have audio input, but the version that's in that's going to be in Austin will have audio input and so on.
Okay, but would you have like remote operators, for example?
I mean, every now and then, if a car gets stuck or something, someone will unblock it. But it's just because we are a bit conservative and tend towards more safety than even if we get stuck every now and then. We do have remote support, but it's not going to be required for safe operation. If anything, it's just required for more availability.
Anyway, it's only a couple months away, so you can just see it for yourself in a couple months in Austin.
Great. Our next question comes from Edison at Deutsche Bank. Edison, please unmute yourself.
Hi, thank you very much for the question. So I want to ask about the Optimus supply chain going forward. You mentioned, very fast ramp up. What do you envision that supply chain looking like? Is it going to require many more suppliers to be in the US now because of the tariffs? How does one kind of think about what needs to happen there?
We have to see how things settle out. I don't know yet.
Right.
I mean, so some things we're doing, as we've already talked about, which is that we've already taken tremendous steps to localize our supply chain. We're more localized than any other manufacturer, and we have a lot of things underway that to increase the localization to reduce supply chain risk associated with geopolitical uncertainty.
Did you have a follow-up?
Yeah. Wanted to come back actually to the robotaxi then. Do you have a sense on how many cars or how big the scale will be initially and how that might ramp up? I know you're targeting millions of vehicles in the second half kind of next year. But initially at launch, how many vehicles would be reasonable? And is it going to be as simple as if one goes to Austin, let's say in late June or July, you'll be able to request?
Yeah. We're still debating the exact number to start off on day one, but it's like, I don't know, maybe 10 or 20 vehicles on day one. And watch it carefully, then scale it up rapidly after that. So, we want to make sure that we're paying very close attention the first time this happens. But yeah, you'll be able to, end of June or July, just go to Austin and order a Tesla autonomous drive.
Great. The next question comes from George at Canaccord.
Hi, thank you for taking my question. It has to do with FSD pricing. Can we envision when you launch unsupervised FSD that there could be sort of a multi-tiered pricing approach to unsupervised versus supervised, similar to what you did with autopilot versus FSD in the past? Thank you.
I mean, this is something which we've been thinking about. I mean, just so you know, for people who have been trying FSD and who've been using FSD, they think given the current pricing is too cheap because for $99, you're basically getting a personal show.
Yeah, I mean, we do need to give people more time to like, if they want to look at, like a key breakpoint is, can you read your text messages or not?
Yes.
Can you write a text message or not? Because obviously people are doing this, by the way, with unautonomous cars all the time. And if you just go for a drive down the highway and you'll see people texting while driving, doing 80 miles an hour.
And putting the makeup on at the same time.
Yeah, putting on makeup, doing their hair with the mirror down, and texting and driving at 80 miles an hour. This is a common occurrence. So people eating lunch, you name it, shaving, So anyway, but right now the car is very insistent that you pay attention to the road. Which reduces the value somewhat, because it's very rigorous about you paying attention to the road. And we'll gradually lighten up on that with, every few weeks or every month, we'll relax that a little bit, make it so you can be more and more able to do things you want to do, and not have the car demand your rigid attention. So that value, it'll really be profound when you can basically do whatever you want, including sleep, and then that $99 is going to seem like the best $99 you've ever spent in your life.
Great. And George, did you have a follow-up?
My follow-up is about geographic expansion. Just maybe discuss additional markets. There's been some news around India recently that you could launch this year and next. Thank you.
So yeah, I mean, we've been working on getting into India. India is a very hot market, and especially the current, and I don't want to talk just about tariffs, but the current tariff structure with India is that any car which we send in is subject to 70% tariff. Also like a 30%, luxury tax on it. So, the same car which we're sending is like 100% more expensive than what it is. So that creates a lot of, anxiety. It's like, people feel, okay, they're paying too much for the car. And by the way, we're not getting the money. The local government is getting the money. And that's why we've been very careful trying to figure out when is the right time. Like I said, we are working on it. It would be a great market to enter because India has a big middle class, which we would want to tap in, and that is the market which we want to be in. But again, these kind of things create a little bit of tension, which we're trying to work around.
Great. Thank you so much. The next question comes from Adam Jonas at Morgan Stanley. Go ahead, Adam.
Come on, people, you're killing me.
We can't hear you, Adam. So maybe we'll put you back in the queue, and we'll move to Colin Langan from Wells Fargo while Adam figures out his audio.
Womp womp.
Colin, please unmute yourself.
Oh, great. Do you hear me?
Yes.
Oh, great. You're still sticking with the vision-only approach. A lot of autonomous people still have a lot of concerns about, sun glare, fog, and dust. Any color on how you anticipate on getting around those issues? Because my understanding, it kind of blinds the camera when you get glare and stuff.
Actually, it does not blind the camera. We use an approach which is direct photon count. So when you see a processed image, so the image that goes from the sort of photon counter, so the silicon photon counter, that goes through a digital signal processor or image signal processor. That's normally what happens, and then then the image that you see looks all washed out because if you point the camera at the sun, the post-processing of the photon counting washes things out. It actually adds noise. So quite a big breakthrough that we made some time ago was to go with direct photon counting and bypass the image signal processor. And then you can drive pretty much straight at the sun, and you can also see in what appears to be the blackest of night. And then in fog we can see as well as people can, probably better, but I'd say probably slightly better than people, well, than the average person anyway. Yeah.
So the camera is able to see when there's direct glare on it. I'm a little surprised by that.
Yeah.
Okay. And then there were obviously media reports the other day that the affordable model was delayed. Doesn't sound like that's correct. Those reports also talked about it being more of a cheaper version of the Model Y. Any color on what we should expect? Is it a cheaper version of the Model Y, or is it actually going to be a design change with it?
So I think Lars already covered it in answering one of the say.com questions. The real thing which we are trying to focus on is affordability. And using our existing lines, and there's always limitations when you're using existing lines as to how many different form factors can you bring to. So that's the way I would say you should think about it. And I don't know if Lars.
Oh, that means no new
I
car.
think I said this before in other calls. Like,
there it is.
With the recent upgrades to the Model 3 and Model Y platforms, we made some pretty great cars at pretty great prices, and we added a bunch of features and things like that. I think it's easy to consider that, moving forward, Tesla doesn't make bad cars, and we always make, our intent is not to make a car that is any worse than any car we've ever produced in the past. And so, the models that come out in the next months will be built on our lines and will resemble in form and shape the cars we currently make. And but the key is that they'll be affordable and you'll be able to buy one.
Great. We might have time for one last question. Adam, we'll try your audio again.
Form and shape, and will be affordable.
You want to try to unmute yourself, Adam?
Come on, Adam.
All right. Unfortunately, still not working.
Sorry.
Oh, there you go.
Sorry, guys. Technology.
Yeah, it's hard.
Yeah, hi. Yeah, in the February 28th Joe Rogan interview,
oh my,
Elon, you advocated for a ramp in tariffs to give people time to adjust. Otherwise, quote, you said the system would break and bad things would happen. So are things breaking yet? And if the tariffs as announced remain in place, when would things start breaking?
Well, at the risk of stating the obvious, I'm one of many advisors to the president. I'm not the president. So, but I've made my opinion clear to the president, and and other people made their opinion clear to the president. He listens, he talks to many people, and he makes his decision. And I'm hopeful that the president will observe whether my predictions are more accurate than the predictions of others, and perhaps weigh my advice differently in the future. We shall see. I'm an advocate of predictable tariff structures, and generally I'm an advocate for free trade and lower tariffs. Now, one does need to take a look at where if some country is doing something predatory with tariffs, or is providing extreme support for, if a government is providing extreme financial support for a particular industry, then you have to do something to counteract that. But I think that's on a case-by-case basis strategically. The president is the elected representative of the people, and is fully within his rights to do what he would like to do. So,
okay, Elon, I respect that. Just as a follow-up, and thanks again. Between China and the United States, who, in your opinion, is further ahead on the development of physical AI, specifically on humanoids? And also drones, I'd be interested. And is it even close? And kind of how? Serious. And,
well, I think the answer on drones. A friend of mine, Naval, made this posted on X. I reposted it. I think a prophetic statement, which is any country that cannot manufacture its own drones is doomed to be the vassal state of any country that can. And America cannot currently manufacture its own drones. Let that sink in. Fortunately. China, I believe, manufactures about 70% of all drones. And if you look at the total supply chain, China is almost 100% of drones have a supply chain dependency on China. So China is in a very strong position. but here in America, and we need to shift more of our people and resources to manufacturing, because this is I have a lot of respect for China, because I think China is amazing, actually. But the United States should not have such a severe dependency on China for drones and be unable to make them unless China gives us the parts, which is currently the situation. With respect to humanoid robots, I don't think there's any company in any country that can match Tesla. Tesla and SpaceX are number one. And then now I'm a little concerned that on the leaderboard, ranks 2 through 10 will be Chinese companies. But I'm confident that rank 1 will be Tesla.
Great. Well, I think that's unfortunately all the time we have for today. We appreciate all your questions and look forward.
Okay, cool. Wow, that was a lot of information. So thank you so much if you were watching that. Obviously, got to do a summary. Remember, the House Hack non-accredited round is live. You're welcome to check that out at househack.com. Diversify away from some of the insanity of the stock market. Diversify into a great real estate company. Get 5% yield plus all of the upside in the stock, which is kind of cool, and some downside protection, which is great. Anyway, okay, so yeah, look, stock's up 5% after actually kind of bad earnings. Yeah, a lot of this probably because of JPOW, but we'll go through all of it in just a moment. We're going to do a summary. I might break the live stream if I try this really quick, though. Let me try this. If I break it, I'll wait for the video in like 20 minutes, and it'll within the next 25 minutes. So if this breaks, you'll see the video post within 25 minutes. But I'm trying this on a different computer, and I don't know that I can pull off what I'm trying to do here. So let me find out. Yeah. Okay. Yeah, that's not going to work, is it? Bummer. It's not. Okay. Then I might have to do it separately. So yeah, that's just gonna be the easiest way to do it. Okay, that's fine. I'll post the summary. There's gonna be a lot, so just wait for it. I'm gonna do the summary right now, so give me 20 minutes or so to film it, and then I'll post it. So ideally, this is up by 4:30, and it's gonna be the Tesla and Enphase summary in total. So just give me about 20 minutes or so, and we'll see you there. Okay. Remember to check out the Meet Kevin membership over at meetkevin.com. Thanks so much. Goodbye. Good luck out there.